What is the meaning of the term capital? Capital simply refers to the excess of value of the assets compared to the liabilities of a bank. Very simple idea. How much is your assets in excess compared to the value of, right, the liabilities that the bank has? That is called as capital. Core capital, right, that is a tier 1 capital, is more reliable, can absorb the losses much more easily compared to tier 2 capital. Right, that's the reason I said whenever RBI has restrictions, we will have more of tier 1 capital compared to tier 2 capital. Then we have discussed risk weighted assets, RWA. RWA basically allocation of risk. Whatever assets are held by the bank, each of the asset, there is a risk associated with that. That we will allocate a risk weightage and calculate, and this is called as a risk weighted assets. Then using risk weighted assets and capital, we'll calculate another tool called as capital adequacy ratio. Capital adequacy ratio or capital to risk weighted assets ratio. That is, in simple terms, what should be the minimum amount of capital? I repeat, what should be the minimum amount of a capital that should be held by the banks in order to absorb losses in the future? Right? In case of India, I said for some of the banks it is 9%, for some it is 12%, for some it is 15%, and that is generally decided by Reserve Bank of India. After that, we have discussed Basel 1, Basel 2, and Basel 3. Okay. Now, let me go to the next concept, non-performing assets. NPA, non-performing assets. Now, what do you mean by non-performing assets? Point number 1. Can I say assets are nothing but, right? Assets are nothing but the loans which are issued by the bank. Point number 1, please do let me know. Assets are nothing but the loans which are issued by the bank. Can I go forward? Point number 2, whenever the loans are issued by the bank is expecting payment in the form of interest plus principal. I'll repeat the statement here. Whenever the bank has given a loan, what it is expecting? It is expecting returns in the form of interest plus principal. Now, what if the borrower does not pay? The borrower does not pay this amount. Either the borrower will not pay part of the interest or the borrower will not pay the part of the principal. For example, imagine every month you are supposed to make a payment of 20,000 rupees to a bank. I'll repeat the statement here. Imagine monthly basis, you are supposed to make a payment of 20,000 rupees to the bank. Now you do not pay this 20,000. Either you pay 5,000 rupees or you pay 10,000 rupees or you don't pay any amount here. You do not pay any amount. Now can I simply say, because the borrower has not paid either the interest or the principal or the interest plus principal, can I simply say now the bank is not earning anything on the asset? Let me know. The bank is not earning anything on the asset. And because the assets are not performing, assets are not giving any returns to the bank, we'll simply call them as non-performing assets. Any difficulty understanding this? Because the assets are not generating returns for the bank, these are called as non-performing assets. Right? And what is the technical definition in case of banking sector in India? If a loan is not repaid for 90 days, I'll repeat the statement here. If the loan amount is not repaid for 90 days, then this loan will be classified as a non-performing asset by the banking sector. Now, if it is repaid, we'll call this as a standard asset. If it is not repaid for 90 days, we'll call this as a non-performing asset. But between the standard asset as well as a non-performing asset, for up to 90 days, there is one more classification. Immediately, they will not classify your loan as a NPA. Please understand. I'll repeat it. Immediately, they will not classify this as a NPA. They will wait for 90 days and after that, they will classify this as a non-performing asset. Sir, what do you mean by this? Let's take a very simple example here. Imagine 1st of January, you are supposed to make a payment, loan payment. So 1st of January, you will not make the payment. For next 90 days, For next 90 days, the bank will wait, and after 90 days is over, the bank will classify your asset as a non-performing asset. That is point number one. But for 90 days, what they will do? For 90 days, what is the process that they generally follow? For 90 days, if the repayment is not received, they will classify this account as special mention account. Please remember this. Very often this is cited in the newspapers. Special mention account. So from the first day, right, from the first day when you default to 30 days, they will classify this as a special mention account 0. From 31st day of the default to 60th day, they will classify this as a special mention account 1. And if you are defaulting from 61st day to 90th day, they'll classify this as special mention account 2. SMA 1, SMA 2, and before that SMA 0. And after 90 days is over, even then if you do not make a repayment, then they'll simply classify this as a non-performing asset. So any problem so far? System is very simple. You keep on repaying, then this is called as a standard asset. If you do not repay for 30 days from the date, from the last date, then they'll classify this as a SMA 0. From 31st day to 60th day, SMA 1. And from 61st day to 90th day, they'll classify this as SMA 2. After 90 days is over, they'll simply classify this as non-performing asset, NPA, non-performing asset. Now, even within NPA, there is a classification. What if this account becomes NPA for 1 year? This account is NPA for 2 years. If this account is NPA for 3 years, there is a classification within NPA. If an account remains an NPA for up to 1 year, this is called as a substandard NPA. And if the same loan account remains NPA for more than 1 year, then this is called as a doubtful NPA. So they'll classify this as a NPA for 1 year, and they will classify this as the doubtful for next 3 years, and after that, basically they'll classify this as a loss making NPA. After that, they'll make it as a loss making NPA. Right, so this is the classification of the accounts in the banking sector. Anybody has any difficulty, please do let me know. Otherwise, I'll go to the next one. If suppose the payment is done in advance, my dear, what is the first classification? Please have a look at, no? If you are paying the money, then it will be called as standard asset. It is standard asset. Okay? Any difficulty? Can we go forward? Sir, is it same as credit risk? Of course, yes. Credit risk is what? You give a loan and the borrower might default. Might default means what? The borrower may not repay the loan amount. That is basically credit risk. Done? So now, let me go to the next one. What are the reasons why there are high NPAs in the market? What are the reasons why there is a high NPAs in Indian market? Let's go point by point. First one, imagine here is a bank. Follow this system very carefully. Imagine here is a bank. Bank will give loan to a company. Company will use the loan. Step number one, bank will give loan to a company. Company will use the loan, produce goods and services, sell goods and services in the market. Point number two, generate revenue. Generate revenue. That is point number three. Now, the company which is generating sufficient amount of money will use this revenue and repay the loan to the bank. It's a simple 4-step process. Bank will give a loan, company will use the loan, produce goods and services, sell it in the market, collect money and use the money to repay the loan. This is generally how the system works in the market. Now, let's say this market can be a domestic market or can be international market. This market can be domestic market or international market. Question number one. Please tell me, if there is a recession or a slowdown in the domestic market, what is the impact on the revenue of the company? Let me know. Question number one. If there is a recession or a slowdown in the domestic market, what will be the impact on the revenue of the company? All of you will agree, revenue will fall down. And in extreme cases, if there is a pandemic, don't you think there's a possibility that the company might incur losses also? Question number two, what will happen if the same situation is applicable even in the international market? USA, let's say, will fall into recession. In USA, let's say inflation rate is very high. Right? Even in the European market, there is a recession. Germany is falling into recession, etc., etc. Now, don't you think same effect will be felt by Indian companies which are exporting to international market? That is, their revenues will go down. Now, if the revenues will go down, what will happen to repayment? Right? Don't you think the repayment of the companies to the banking sector will also be affected? Can it lead to company not making repayment to the bank? And as a result of this, can this lead to generation of non-performing asset? Any problem here? Can this lead to generation of non-performing asset? That is very important. Please remember. Now look at point number 1, point number 2. Anybody has a problem with point number 1 and 2? Anybody has a problem with point number 1 and 2? Now, related to this, there is a concept called as twin balance sheet problem. Twin balance sheet problem. Twin balance sheet problem. Now, please understand what do you mean by twin balance sheet problem. Can I say companies will incur losses, their revenues will go down, their expenditure is higher, the revenues are lower, their liabilities are higher. Will it have an impact on the balance sheet of the companies? Simple question. Okay, the company has taken the loan, means liability. So liability is higher, their revenues have gone down. Will it have an impact on the balance sheet of the company? Of course, yes. Liability side. It will affect the liability side of the company's balance sheet. Come to the bank here. Come to the bank. Bank also has a balance sheet, and in the bank's balance sheet, they have listed loans as assets. They've listed the loans as assets. Are these loans providing returns to the bank? No, these are not providing returns because the companies are incurring losses. Now, don't you think because of this, the balance sheet of the bank will also be under pressure? Yes or no? Think logically, always think logically. Because of this, don't you think the balance sheet of the banks will also come under pressure because the loans are assets for the bank? Now, two balance sheets are under pressure. Can I call this as twin balance sheet problem? Twin means two, right? I'm pretty sure all of you know this. Twin means simply two. Because of two balance sheets which are under pressure, can I call this as a twin balance sheet problem? Of course, yes, you can call this as a twin balance sheet problem. This is there in the newspaper. Please be very, very careful. Please be very, very careful. This is there in the newspaper. Why? In case of India, RBI says in the last couple of years, Reserve Bank of India as well as Government of India have implemented lot of reforms, lot of measures in order to address the issue of twin balance sheet problem. And as a result of these reforms, the non-performing assets in the banking sector have gone down. The companies are performing much better now compared to what they were doing earlier. Let's say in 2016, 17, 18, 19, 20. Compared to that, the bank's balance sheet have improved now, and the company's performance also has improved. So rather than having a twin balance sheet syndrome or twin balance sheet problem, now we are having a twin balance sheet advantage. Is it okay? Please check it. Very often this is cited in the newspaper. I'll repeat it again. Rather than having a twin balance sheet syndrome or twin balance sheet problem, today we are having twin balance sheet advantage. Any problem? Can we go forward now? Any problem? Can we go forward? What is balance sheet? My goodness. Okay. So understand this. If I've not explained it earlier, please understand now. Balance sheet is one record one document which is prepared by every company. Okay. Balance sheet is a document which is prepared by every company. Just like profit and loss account, every company has to prepare a balance sheet. Let me show it to you. Please have a look at it. Do not by heart it, but please have a look at it. This is the balance sheet of RBI. This is the balance sheet of RBI. What are you seeing? Do not by heart anything from this. What are you seeing? Can I say on the right side, Reserve Bank of India has listed assets. On the right side, generally the balance sheet is divided into two parts. On the right side, the balance sheet has assets. Yes or no? Can you observe? And on the left side, the balance sheet has liabilities. Any problem in understanding what is the concept of balance sheet? Do not do a PhD thesis on this. Any problem in understanding what is the concept of balance sheet? Balance sheet is one of the financial statements which is issued, which is prepared by every company, not only in India, but across the globe. What is there in the balance sheet? On the right side, we will list the assets, and on the left side, we will list out the liabilities of a company. And because this is called as a balance sheet, please look at the total liability as well as the total assets for both of the years. Are they one and the same? Let me know. Look at the total liabilities as well as the total assets. Are they one and the same? They should be one and the same. That is the reason this is called as a balance sheet. The fundamental nature of balance sheet is that you should have balanced amount on both assets as well as liabilities. Now, any problem in the term balance sheet? Let me know. Any problem in the term balance sheet? Can we go forward? Anybody has a problem with the term balance sheet? Now, what I'm saying is, right, look at the company. Please look at the company. The company will prepare balance sheet. The company will prepare balance sheet. And if the company is preparing balance sheet, please tell me the loans will be written on which side? The loans which have to be repaid will be written on liability side. Correct? The loans which have to be repaid are liabilities for a company. On the other side, for a bank, the bank will also prepare a balance sheet. It will also prepare a balance sheet. Now, can I simply say the loans issued by the bank are its assets? So they will write the loans on the asset side. Point number two, company, let's say because of right slowdown in the domestic market or in the international market, let's say is incurring a loss. Let's say they're incurring a loss. Now, as a result of this, please look at the balance sheet of the company. Can I say balance sheet of the company is under pressure now? Let me know. Can I say balance sheet is under pressure? And second, if the company doesn't repay the loan, the account becomes an NPA. The account becomes an NPA. Then can I simply say the assets which are there on the bank's balance sheet, they will also not be earning money. Now can I simply say, right, the bank's balance sheet is also under pressure. Twin balance sheet problem. Anybody has a problem with this? Twin balance sheet problem. Two balance sheets, right? Because of lot of loans taken and lot of loans given, there are two balance sheets which are under pressure. Twin balance sheet problem. And right, that is a precise reason I said Government of India and RBI in the last couple of years have implemented reforms. As a result of this, now companies are performing better. Companies are performing better, as a result of which they are able to repay loans now. And banks, the NPAs in the balance sheet of the banks also have come down, which means the balance sheet of the banking sector also has improved. So rather than using the term problem for the two balance sheet, now we are saying it is a twin balance sheet advantage. Twin balance sheet advantage, right? So that is the concept of twin balance sheet advantage. Any problem at least now? What is the difference between balance sheet and twin balance sheet? Arey Baba, very poor listening. Please tell me, right? Twin balance sheet doesn't mean two balance sheets. Are we not discussing two balance sheets here? What are you listening to? Early morning, please wake up. If borrower is paying less amount than required EMI, will that also be becoming NPA? Yes. If your if your EMI is 20,000 rupees, if you pay any amount less than 20,000, then it will be counted as a NPA. Why? If you pay less than 20,000 rupees, then basically it means either you are not paying a part of the principal or you are not paying part of the interest. So either interest is not paid or principal is not paid, that will be counted as NPA. Okay, let me go to the third one. Increasing number of willful defaulters. Okay, increasing number of willful defaulters. Now, what do you mean by willful defaulters here? Please understand this carefully. A borrower who has taken the loan has the financial capacity to repay the loan. Understand the statement here. A borrower who has taken the loan has the financial capacity to repay the loan. But purposely, remember this, purposely, there is a default on the loan payment. Purposely, there is a default on the loan payment. That is, imagine I've taken the loan, I have sufficient money or assets to repay the loan. But purposely, I will not repay the loan. I will let the account become an NPA. Such borrowers are called as willful defaulters. Any difficulty here? Please do let me know in the definition of willful defaulters. Any difficulty? I'll repeat it again. A borrower will take the loan, has sufficient amount of assets or money to repay the loan, but they will default on the repayment of the loan. They will simply default on the repayment of the loan. Such defaulters are referred to as willful defaulters. And in case of India, the number of willful defaulters have kept on increasing. More and more companies, more and more individuals who have taken the loan, they are defaulting on the loan repayment despite having sufficient asset. Now, please tell me, if willful defaulters will increase, what will happen to NPAs? If willful defaulters will increase, what will happen to NPAs? Non-performing assets will also start increasing. Those are asking why, how, etc. Have you not heard of Mr. Vijay Mallya's case? Right? You people do not read newspapers. That's the reason all of these becomes confusing to you. Have you not heard of Mr. Vijay Mallya's case, Mr. Nirav Modi's case? Do you think these people did not have assets to repay? Of course they had. But even then, they defaulted on the repayment. Right? So that is the reason the number of willful defaulters are increasing, and that will lead to higher NPAs in the system. Next one, inefficient functioning of DRT. Let me explain this separately. Inefficient functioning of DRTs. Now, please understand, a bank can provide a loan to a company. A bank can also provide loan to an individual borrower. Correct? Anybody has a problem with this? Bank can provide loan to a company and bank can also provide loan to an individual borrower. Now, if the company doesn't repay the loan, then the bank will simply file an application against the company at a National Company Law Tribunal, NCLT. National Company Law Tribunal, NCLT, National Company Law Tribunal. Okay. Now, if there is an individual borrower, individual retail borrower, such as you, such as me, who will take the loan but will not repay the loan, then the bank will file an application against this individual at Debt Recovery Tribunal. DRT, Debt Recovery Tribunal, DRT. Okay, DRT. Now, the concept of DRT has been introduced in India post 1993. In 1993, one act was introduced, passed by the parliament, and as a result of this, we have Debt Recovery Tribunal. And the Debt Recovery Tribunal will take up the cases where individual or retail borrowers do not repay the loan, and they will basically ask the bank to proceed against the borrower, confiscate the asset, recover the loans. But what has happened over a period of time? Simple question to all of you. Think of it. What has happened is, Over a period of time, number of cases which have been filed at the debt recovery tribunal have kept on increasing. The cases which are cases which are filed at the debt recovery tribunal, the number of cases have kept on increasing at a very, very fast pace. Very fast pace. Means more and more cases have been filed at DRT. And under DRT, when we introduced the concept, we wanted the tribunal to clear the case in a span of 6 months. We wanted the tribunal to take care of this case in a span of 6 months. So on one side, number of cases filed have increased, and right, as a result of this, what do you think will happen to this? What do you think will happen to this timeline of 6 months? Do you think all these cases can be resolved in a period of 6 months? Right? Don't you think there will be a situation wherein the number of cases which are filed will be very high? The tribunal will not be able to handle these cases in a timely bound manner. As a result of this, from 6 months, we might end up taking 9 months. From 9 months, we might end up taking 12 months. From 12 months, we might end up taking 15 months, or so on and so forth. And just give you an example here. Don't always imagine always a 9 months, always a 12 months. No. Point I'm trying to make here is from 6 months, and now the time period that will be taken for the DRT resolve the cases has increased to a very large extent. As per Government of India's documents itself, only around 25% of the cases filed in the DRT are resolved in the same year. I'll repeat the statement here. As per Government of India's document, only around 25% of the cases which are filed at the DRT are resolved. Are resolved means cleared in the same year, which means for majority of the cases, now the time taken will be more than 1 year. Now, please tell me, if DRT, right, DRT doesn't resolve these cases very quickly, what do you think will happen to NPAs in the balance sheet of the banks? What do you think will happen to NPAs in the balance sheet of the banks? The NPAs in the balance sheet of the banks will automatically start increasing. That also has contributed for higher NPAs. And finally, governance issues. Finally, the governance issues. Now, what is this governance issues? Please understand this. Imagine the Government of India has given approval for construction of, let's say, 1,000-kilometer stretch of national highway. 1,000-kilometer stretch of national highway. Now, somebody will go to Supreme Court of India, file a public interest litigation against this project and say that this project will be causing a lot of environmental damage. How many of you think that the project will be completed on time? Or how many of you think that project will be completed in the first place? Don't you think a lot of times, land acquisition will become a problem? Project might not be completed at all. Sometimes one of the ministries will not give approval, will withdraw the approval, project will not be completed. Supreme Court will intervene and put a stop on the project, and they will look into the project for many, many years, many months, appoint a committee, etc. As a result of this, that the project might not be completed. So there can be many issues. State government will oppose it, or central government will withdraw its approvals. Judiciary will intervene. Land acquisition will not happen. Land is there under litigation, etc., etc., etc. Because of all of this, the project may not be completed. And as a result of this, a developer who has taken the loan on this project, I repeat, a developer who has taken the loan to construct this project, do you think the developer will be in a position to repay the loan? Right? If you're a project developer, you have taken, let's say, 5,000 crore rupee on this project. Do you have money to repay the loan? No. Your idea was you will construct the road, you will generate revenue, and you will repay the loan over a period of 20 years. But half of the road is over. Now, other side, right, people are opposing land acquisition. State government says not possible, take a different route now, change the design of the road. Supreme Court says no, ecologically sensitive region, change the design of the road. As a result of all of these issues, don't you think the road project may not be completed? As a result of this, what can happen to the project? Project might be stopped, project may not be completed, etc. etc. And that is the precise reason I'm saying, because of various issues like this, they will not be able to generate returns and repay the loan. And this loan will become non-performing asset. Can we go forward here? Can we go forward? Can we go forward to the next point here? Okay, done. So these are some of the reasons why NPAs are higher, why the non-performing assets in case of India are higher. Now, what are the problems? If there is a high NPA, what are the issues? Right? What will be the issue if there are high NPAs? Point number one, if a bank has a very high NPS, please tell me, will it affect lending activity of the bank or not? Simple question to all of you. If the bank has a high NPS, will it affect lending activity of the bank? Of course, yes. If NPAs are very high, returns are very less, lot of assets are not generating returns, I don't think that will have a huge impact on what kind of loans are given by the bank. How many loans are given by the bank? Of course, yes. Point number one. Point number two, if the bank is continuously incurring losses because of high NPAs, you please tell me, will you keep deposits in such a bank? Simple question, right? Do you think, right, you will keep a lot of deposits with such a bank? No, you should not keep it. Why? Losses are higher, risky to keep deposits in such a bank. Now, if you are a market investor in the sense, this bank is issuing, let's say, bond. This bank is issuing shares in the market. Would you be interested in purchasing the shares or bonds of such a company? You should not do that. Why? It is very risky. Bank is continuously incurring losses. So don't you think the deposits held in the banking sector would be affected? The investments into the bank's bonds or shares will also be affected. Next point, if the bank continuously is incurring losses, don't you think when the bank will provide a loan to a particular borrower to recover some of the losses, they will start charging a slightly higher rate of interest? Simple idea, right? Imagine you're a bank manager. Last year you incurred losses. To adjust for that loss, to take care of that particular loss, will you slightly increase your rate of interest? Of course, yes, they will do that to address for the losses they are incurring. But if they're charging more rate of interest, please tell me, will companies take more loans? Will individual borrowers such as you and me, will we take more loans? Of course, no. Credit in the market would be affected. Loan issuance would be affected. And because of all of this, right, don't you think it will have a limiting impact on the growth? All of this will have limiting impact on the growth. That is, we could have achieved higher GDP, but we will end up achieving less than that in the form of GDP. So one, lower liquidity as well as profitability. Lower quantity of loans are given, offloaded means are given at a higher rate of interest. Investors will start losing confidence in the performance of the bank. Right? When the banks will give credit, they will charge a higher rate of interest. As a result of this, the retail borrowers as well as corporate borrowers will also start taking lower amount of loans. Various investment decisions in the economy, because the loans rate of interest has increased, various investment decisions will also be postponed. And all of this will have a limiting effect on the growth. Any problem with why high NPAs are a problem in the economy? NPAs will be there. I hope you understand this. NPAs will be there, but if the NPAs start increasing to, let's say, 6%, 8%, 10%, 15%, then definitely, yes, they are a problem for a bank. Can we go forward? Anybody has a problem with what I'm discussing, please do let me know. If DRTs are taking more time, banks can directly take action against borrowers like sale of collateral, etc. Earlier that was allowed, even in certain cases that are allowed. But please understand, you need to have certain legal backing. You need to have certain legal backing. That is the reason you approach DRTs. Okay. Third point, you want to purchase a bond issued by a bank. You want to invest in a bond. For example, do you remember AT1 bond, Tier 2 bond, etc.? Now, please tell me, the bank is continuously incurring the losses. Will you be interested in purchasing the bonds of such banks? Simple question. You want to purchase the shares of, let's say, State Bank of India in the stock market. But State Bank of India is continuously incurring losses. NPAs are very high. Would you be interested in purchasing the shares of SBI? If you have the shares of SBI, will you not start selling the shares of SBI now? Erosion, loss of investor confidence. Okay, done. Can they increase the interest rates already existing on the loans? Did we not discuss this yesterday under external benchmarking? Let me know. Before you ask these kind of questions, you tell me, did we not discuss the same thing yesterday in external benchmarking? If repo rate changes, can the bank increase the rate of interest on existing loans? We have discussed all of this, Baba. We have discussed all of this. After all of it is over, you are asking the same question. Okay. IBC, right? Insolvency and a bankruptcy code. IBC. Now, one of the reasons why Government of India says today we are having a twin balance sheet advantage is the concept of insolvency and bankruptcy code or insolvency and bankruptcy law. Understand the process here. Very, very important. Understand the process. Now, what are the important points regarding IBC? Point number one, we have set up a regulator. We have set up an authority to ensure all the provisions of the law are followed by all the participants. And this authority, which will regulate the law, it is called as a Insolvency and a Bankruptcy Board of India. Please tell me, have you come across IBBI? Insolvency and Bankruptcy Board of India, IBBI. And if you have the habit, right, if you have the habit of reading newspapers, multiple newspapers, yesterday in Mint newspaper, there was an editorial, open editorial on insolvency and bankruptcy code. Okay. But anyways, understand this. First point is we have a regulator, Insolvency and Bankruptcy Board of India. Point number two, there is a term IR here, right? There's a term IR. IR simply stands for Insolvency Resolution. Insolvency Resolution. Insolvency Resolution. Now, what do you mean by insolvency resolution? Follow this very carefully. Imagine a company has taken the loan from a bank. Creditor. Bank is a creditor, company is a borrower. Okay. The company has taken the loan from the bank, but they are unable to repay. Now, the bank, that is the creditor, has two options in front of them. One option is they will sell the company. They will sell the company to a new buyer. They will sell the company to another buyer, collect money from another buyer, or they will simply close the company, which is called as liquidation, which is referred to as liquidation. I'll repeat it. A company has taken the loan from a bank and the company is unable to repay the loan. Now, the bank has two options in front of them. One is sell the company to a new buyer, which is called as insolvency resolution, or else the bank will simply force the company to close, which is called as liquidation. And what is the benefit under liquidation? Why banks might choose liquidation? Imagine here is a company. Company is closed. The land of the company will be sold. Money can be recovered. Anybody has a problem with this? Company has machineries. Machineries can be sold and money can be recovered. The trucks, lorries which are owned by the company will be sold, money will be recovered. That is the reason why the banks can also opt for liquidation of the company. Now, please, tell me if you are thinking like an economist, and please do. If you think like an economist, which is better for the economy? Do you think insolvency resolution is better for the company, or the liquidation is better for the company as well as to the economy? Think like an economist. According to you, what do you think is better? Going for insolvency resolution or liquidation? Right? Please choose the first one. Please choose the first one. Insolvency resolution is always better. Having a resolution is always better. Why? In case of a resolution, you are basically finding a new buyer. The new buyer will take over the company. Right? The new buyer might remove some employees. New buyer will not close the company. The new buyer will restart manufacturing. New buyer will ensure production will take place. New buyer will ensure company will continue to perform. But on the other side, if you go for liquidation, can I say all the employees of the company will be removed, laid off? Let me know. All the employees of the company will be laid off, right? People will start losing jobs. Second, if you are manufacturer of a product, imagine you're manufacturing a product and you're getting raw material from this company. Now, if this company is closed, don't you think now you'll have to find a new supplier of raw material? Don't you think that will disturb, the supply chain ecosystem in the Indian economy? That's the reason we say having insolvency resolution is better than going for liquidation. Right? Going for resolution is better compared to liquidation. Done? So come to the second point here. Insolvency resolution should be handled by a professional. Right? The professional is called as insolvency professional. There is a professional referred to as insolvency professional. What is the role of insolvency professional? Give me 1 minute. You will come across the role of insolvency professional. Point number 3. The insolvency resolution process should be conducted within stipulated time period. Can be, understand this, should be conducted within a stipulated time period. What is a stipulated time period now? As per the latest data published by the government, the stipulated time period is 330 days. The process should be completed within 330 days. Point number 4. There should be a separate process for individuals insolvency resolution as well as a corporate insolvency resolution. We should have a separate process whenever individuals will default and when companies will default. Now, for UPSC exam, focus only on the corporate insolvency resolution process. I repeat, for UPSC, be focused on corporate insolvency resolution process. This is important. Individuals are not very important for UPSC. Corporate insolvency resolution process. CIRP. Corporate insolvency resolution process. Now, the DIT will take over the cases of individuals as well as the partnership entities, and the NCLT will take over the cases of companies as well as limited liability partnerships. Okay, now let me start. How the process will be taken care. I've taken this process from the bankruptcy bill, that is insolvency and bankruptcy bill. This has become an act now. This has become an act. I've taken the process from the bill. Let me go forward. Whenever a lender or a borrower, under this, a lender or a borrower can approach NCLT and they can file an application. The lender says the borrower has taken the loan and they have not repaid. Or a borrower says, I have taken the loan, I am unable to repay. Either ways, please remember this. A lender or a borrower both can approach the NCLT, National Company Law Tribunal. Next, in the next 14 days, the NCLT either has to accept or reject the application. I'll repeat the statement. In the next 14 days, either the NCLT has to accept or reject the application. Now, let's say NCLT will accept the application. Now, right, have a look at this. The authority will appoint insolvency professional. I've written the authority will appoint, but please understand the complicated process is that there's a complicated process. Committee of creditors are appointed. Committee of creditors will say who should be the insolvency professional. Until then, a temporary insolvency professional is there, etc., etc. That detailing for GS paper 3 is not required. Let's say insolvency professional will be appointed. Now, what is the role of the insolvency professional here? Let me ask a very simple question. Imagine you are a bank. You have given loan to my company. Okay, the company owned by me. Now, this company has incurred huge amount of losses. The company has incurred huge amount of losses. You have filed an application at NCLT. NCLT has accepted the application. Simple question to all of you. How many of you are okay with me continuing to manage the company here? Let me see. Right, you have given a loan. My company has incurred a loss. You have gone to NCLT, filed an application. Now, application has been accepted. Please tell me how many of you are okay even now with me continuing to manage the company? Right, will you be okay? Right, will you simply say, okay, continue to manage it? Anyways, I filed a case at NCLT. You should not allow me. I'll tell you why. You should not allow me to manage my company. Why? Don't you think one of the reason my company has incurred a loss is because of my policies? Tell me, does it make sense to you or not? One of the reason the company's incurred losses is because of my mismanagement, because of my management. Now, when you're filing a case against my company, why should you allow me to continue to manage the company? You should not allow me. That is the reason whenever the insolvency professional is appointed, the insolvency professional will take over the management decision making of the company. Right? I will not be doing this now. Right? The company's management decision will be coming under the insolvency professional. Point number one. Come to the second point here. Second point is now the insolvency professional will basically talk to creditors. Creditors. Who are creditors? The people who have given the loan to the company, who are expecting repayment from the company. These are called as creditors. Now, there are two simple terms here. One is a secured creditor and the second one is unsecured creditor. Do you remember the concept of secured and unsecured borrowing? Please do let me know. It's not that I've not discussed. I want you to just remember it. Right? A secured and unsecured creditor or unsecured borrower. What is the idea? Secured means there is always a collateral. Unsecured means there is no collateral. Now, can I give you examples of secured creditor for a company? Can I say bank is the best example for a secured creditor? Bank is the best example for a secured creditor. Whereas, let's say a vendor, a raw material supplier, vendor or a raw material supplier is an example of unsecured creditor. Think of it. A vendor or a raw material supplier, even NBFCs are type of unsecured creditors only. Right? A vendor or a raw material supplier, it is a best example of unsecured creditor. Any problem here? Can we go forward? So, whenever you talk about committee of creditors, who are the most important out of all these committee of creditors? It is the secured creditors. Preference is always given to secured creditors. That is the reason whenever you talk about committee of creditors here, it is this committee of creditors who will take a decision. That is mainly the secured creditors who will take the decision for the company. That is whether the company should be liquidated or right, basically the company should be sold to another company. That is the committee of creditors. That is the role of the committee of creditors. Now, the committee of creditors will come together, have a discussion and take a decision whether to liquidate or to sell off the company. Right? So COC will deliberate and discuss, and the decision by the COC will be conveyed to NCLT. And if the NCLT, understand this, right? Once the decision comes to NCLT, NCLT will issue the order, and whatever is the decision of the committee of creditors, right, that will be the order issued. Now, question is, sir, what if committee of creditors do not come to a decision? And by the way, whenever I say decision, please remember this. Sometimes you will require more than half of the value of the creditors, to come to a decision. And sometimes you will require more than 66% of value of the creditors to come to a decision. Now, what do you mean by value of creditors? Let me give a very simple example. Imagine there are 4 banks which have given loan to a company. Understand the logic behind it. Imagine there are 4 banks. Okay, A has given a loan of 1 crore rupee, B has given loan of 2 crore rupee, and C has given a loan of 3 crore rupee, and D has given a loan of 994 crore rupee to a company. Now, please tell me, should we go by number of creditors or should we go by the value of creditors whenever you want to take a decision here? Simple question to all of you. What does make sense to you? Should we go by number of creditors? What if A, B, and C will come together, 3 creditors, and they will say, let's go for liquidation. And D says, no, let's go for sale off. Right? So, don't you think D has a higher stake here? D has a higher exposure to the company. That is the reason. Always remember, the decision making is done by value. Value. How much is your total exposure for the company? Out of the total loans taken by the company, what is your exposure to the company? That will determine how much weightage, how much percentage of the votes will be given to you. So always remember this, committee of creditors will take a decision based on the value of the votes. Right? And what if the committee of creditors are not able to come to a decision? They're not able to come to a decision. In such cases, by default, insolvency professional will recommend liquidation of the company. If they are not able to come to a conclusion, by default, they will recommend a liquidation of the company. And all this process, understand this, all this process has to be done in 330 days now. All of this process has to be done as per the law. As per the law, has to be done in 330 days. This is how Insolvency and Bankruptcy Code or Insolvency and Bankruptcy Law will actually work. Can we go forward? Any problem in what I've discussed? Can we go forward? Can an individual investor approach NCLT for recovery of loan? Why you will go to NCLT? You tell me. Look at the name. Please tell me. Look at the name. Right? The name is right, basically Company Law Tribunal. If a company, right, if a company does a default on the repayment, right, only then you can approach NCLT. Okay, COC can arrive decision as a IR. Yes, it is entirely up to COC. It is entirely up to COC. They can take a decision to liquidate or they can take a decision to sell off. That is entirely up to them. Okay. Sir, is it clear in 330 days? I'll come to the problem. Any problem with the process, you tell me. Don't ask me, has it been successful, right? How many cases, etc. I will tell you, I will do the critical evaluation of the process in some time. Any problem with the process? Sir, how creditor will benefit from liquidation? If there are no buyers, what is the option available to you? Let me know. If there are no buyers, what is the option available to you? There is no option. You will have to go to liquidation process. Okay. Why will borrower approach NCLT? If I've taken a loan, if I know that my company is incurring losses, can I approach NCLT? It is allowed. It is allowed. Can I approach NCLT and say, I'm not going to pay the money now. Please conduct my insolvency resolution. Of course, yes, it is allowed. Okay. IP can only suggest liquidation. Again, please understand, if the committee of creditors do not take a decision. Okay. Unsecured, no collateral. So vendor gives out loan. No, it doesn't mean vendor is giving out a loan. Please understand. Imagine I'm supplying raw material to you. Okay, imagine I'm supplying raw material to you. I will supply raw material worth 10 lakh rupees today. But please understand, you will not make a payment of 10 lakh rupees today. You will pay it after 60 days. Done? Very simple. Right? I will sell the raw material to you today, and right, and you will make a payment to me after 60 days. Now, can I simply say, it is as good as saying you owe 60, I'm sorry, you owe 10 lakh rupees to me for 60 days. Think of it. Can I say it is as good as saying you owe 10 lakh rupees to me, which you will pay after 60 days? Right? Owing means what? Right? Repayment is pending. That is nothing but the concept of liability only. Right? These are unsecured creditors. These are unsecured creditors. Okay? Done? Can we go forward now? Right? Do not complicate it. Please do not complicate it. Always keep it simple. Right? I hope you understand. Do not complicate it. It's a very complicated process, by the way. I don't want to make it complicated. It's a very, very complicated process. For example, some of you are asking, who will appoint? Who will appoint, right, this insolvency professional? I told you, there is a process which is followed. The NCLT will appoint a temporary insolvency professional. Then the committee of creditors is made. Committee of creditors will recommend who should be the insolvency professional. Then that is the person who is appointed by NCLT. Okay. Okay. Now, what is the critical evaluation of IBC? What is the critical evaluation? Right, let's start looking at positive aspect, then we'll go for certain concerns regarding the IBC mode. First one, unified framework. What do you mean by unified framework? A single law. Unified framework simply means now we have a single law. Earlier, please understand the point here. Earlier, we had Board for Industrial Financial Reconstruction. There was one authority set up by Government of India, BIFR, Board for Industrial and Financial Reconstruction. We had NCLT, which was working separately. We had a DIT, which was working separately. We had certain provisions of insolvency under Companies Act. We had certain provisions of insolvency under SARFAESI Act, Securitization and Asset Reconstruction, right, Act. So please tell me, having multiple laws for taking care of insolvency is better, or having only one law to take care of insolvency is better? Think of it. Having multiple laws for taking care of insolvency is better, or having only one law is better? Don't you think having one law will consolidate all the provisions? All of you will agree? Having one law means we are consolidating all the provisions, whether it is an individual borrower, corporate borrower, whether this is a partnership, etc. Doesn't matter. All these provisions will be brought under only one framework. That is the advantage. That is the benefit. And point number two, please tell me, will it not make it easier to conduct business in India because of this? Will it not promote ease of doing business in India? Correct? Will it not promote ease of doing business? So first benefit is, rather than multiple laws, now we will have only one law. It will promote ease of doing business. We are having time-bound resolution. Let me discuss point number 2 and 3. We are having time-bound resolution. Right? Until now, there was no law under which there was a time frame given for insolvency resolution. Now, under IBC, we are saying we are supposed to conduct insolvency resolution for corporates within 330 days. Within 330 days. Is it not a positive aspect of the law? Is it not a positive movement towards conducting insolvency resolution? Answer is yes. Point number 3. Compared to earlier situation, because of this single framework, single law, we are expecting time taken to be lower. As per one survey, please understand, as per one survey, earlier it used to take around 4.3 years for conducting insolvency resolution. I'll repeat, compared to earlier, right, we used to take around 4.3 years for insolvency resolution. Now, because we have a single framework, we will see that the time taken for a resolution would be much, much lower than 4.3 years. Right? I hope you understand. And this is important. Why? I'll tell you. Here is a bank. Please understand this process here. Here is a bank. It has given loan to a company. If the company does not repay the loan, I repeat, if the company does not repay the loan, can I say certain money that the bank could have used for giving more loans is stuck up in the system? Let me know. The bank has given loan to a company. Company is not repaying the loan now. It has incurred losses, has become NPA. Now, can I say certain amount of money that the bank could have used to give other loans is stuck up in the system? Now, because of a unified framework, what if government says you'll be able to recover at least part of this money much sooner? Right? Don't you think that will promote, that will improve the health of the balance sheet of the bank? Now the banks will be able to issue more loans much sooner compared to earlier situation. Can I say this is a twin balance sheet advantage? Think of it. Can I say from twin balance sheet problem, we have moved towards a twin balance sheet advantage now. Okay. Point number 4. Provide the power for the creditors, both secured as well as unsecured. Now, please understand what is the meaning of the point number 4 here. If the borrower doesn't repay the loan, earlier, unsecured creditors did not have any option but to go to court, file a civil case. Simple. Right? Earlier, what used to happen is the unsecured creditors, that is, let's say, raw material suppliers, would go to a court, file a case. Now, please tell me, right, how many of you are under the impression that this case will be resolved by the court very quickly? Think of it. Do you remember the argument? Right? Tariq pe tariq pe tariq pe tariq. Right? So, argument was very simple. The money, even for the unsecured creditors, the money would be getting stuck up in the system for a longer duration. That is the precise reason. Now we say under insolvency and bankruptcy code or under insolvency and bankruptcy law, even the unsecured creditors, right, can threaten to go to IBC, that is under IBC NCLT, and get the recovery. And please understand the biggest advantage of IBC is there is a change in the behavior of the borrowers. There is a change in the behavior of the borrower. This is the biggest advantage. Now you'll ask me, what is the meaning of change in the behavior of a borrower? Let me take a very simple example. Imagine I'm the company, you are a raw material supplier. I'm a company. I have not repaid the money to you as per the agreement that we had entered into. Now, can you go to NCLT and file an application? Think of it. Can you go to NCLT and file an application? Yes, you can do that. And because you have filed an application, is there a danger? Is there a danger that I might lose up ownership of my company? Let me know. Because of your application, is there a danger that I might lose ownership of my company? Of course, yes. Right? So, don't you think there will be a change in my behavior now? I will ensure that whenever the payment is pending, now I'll ensure that I will make you the payment on a right time. Otherwise, I'm concerned, I'm afraid that you will go to NCLT, file an application. As a result of this, I might lose up the ownership. Done? Okay. Right. So this is basically the positive aspect related to the concept of the insolvency and bankruptcy code. Next one. What are the concerns? What are the problems? What are the concerns related to the Insolvency and Bankruptcy Code? Point number one, time taken for accepting and admitting applications has become higher now. Time taken for acceptance and admitting applications has become higher. As per the law, I repeat, as per the law, within 14 days, NCLT is supposed to either accept or reject. Now, many of you ask me, sir, why? Why the time taken has increased? Let me give a very simple example. Imagine there are three judges, right? Let's say example one, there are three judges and four cases are filed, right, with these three judges. Second example, there are three judges and 4,000 cases are filed with these three judges. Please tell me, don't you think in the second example, the time taken for resolution will be very higher? The time taken to actually accept the cases will also be very, very higher. Yes or no? It's a very simple argument. Do not complicate it. It's a very simple argument. What I'm trying to convey to you people is simple. The infrastructure in the form of benches, in the form of experts, etc. within IBC that we have is limited. It is very less compared to the number of applications that they are receiving. As a result of this, the time taken for actually conducting the resolution is very, very high in many cases. And second, the time taken for accepting the applications is also very, very high in these cases. So time taken, very high. Actual time taken for resolution is also very high. Most of the cases are going through liquidation. This is the biggest criticism against IBC. Most of the cases are going through liquidation. The whole idea of IBC was we want the companies to go through insolvency resolution. But what is happening? Most of the cases are going through liquidation under IBC. And if you ask me, sir, why is that happening? Reason is very simple, my dear. If buyers are not interested in the market to purchase these companies, then there is no option. If creditors are not interested in having very low recovery by selling through resolution, then there is no option. You will have to opt for liquidation of the companies. And the recovery rates are also very low under IBC. What do you mean by recovery rates here? Imagine a bank has given a loan and it is expecting a payment. The total amount of money that the bank should collect back is, let's say, 150 crore rupees. Simple numbers. The total amount of money that the bank should be recovering, should be collecting back from the company is 150 crore rupees. Now this company is sold to another buyer. Let's say this company is sold to a new buyer in the market. Point number one. How many of you think the new buyer will pay 150 crore rupees to the company? Let me know. How many of you think that the new buyer, if you are the new buyer, right, will you pay 150 crore rupee for this company? No, right? Don't say, yes, sir, I will pay 150. No, my dear. Right? Don't you think you have more leverage here? Think of it. Don't you think you as a buyer, you have more leverage? Leverage in the sense you have more power. You can purchase it at a much, much lower prices. Right? So that is the reason you might end up paying 40 crore rupee. You might end up paying 50 crore rupee. You might end up paying 60 crore rupee. You will not pay 150 crore rupees. Trust me, you will not pay. If you say, yes, sir, I will pay more than 150 crore, you are not the right person to enter into this business. This is not the right vocation for you. Don't enter into that business. So argument is simple. The company will not pay 150. Company, let's say, will pay 50 crore rupees to purchase this company. Now, please tell me, the bank was supposed to recover 150 crore, but it was able to collect only 50 crore. Can I say recovery rate is 33%? Let me know. Can I say recovery rate is 33% in this example? So the recovery rates in case of insolvency and bankruptcy code are very, very low. It will vary from one case to another case. It will vary from one year to the other year. But please remember, recovery rates are very low. So these are some of the concerns which are associated with the concept of insolvency and a bankruptcy code. Any problem with any of the points? There are time limit of 14 days and 330 days. Then why time taken is higher? Did I not explain this, my dear? If you basically say, you want to accept, you should accept in 14 days, but there are no sufficient, let's say, benches to handle all these cases, don't you think rather than 14 days, time taken will expand to more than 100 days? Let me know, does it make sense or not? Rather than 14 days, can it happen that because we do not have sufficient infrastructure, sufficient experts are not there to accept these cases, will you be able to look into the application within 14 days? Of course, no, that will not happen. It will increase. It will increase to more than 14. In some cases, it is more than 100 days. Okay. The second point in concern counter against third point in positive. Are Baba, both are different aspect. These are positive aspects that we are expecting to get from IBC. These are certain concerns regarding functioning of IBC. Okay. Point number 3 in the concern. Most of the cases are going through liquidation. I told you, right? Most of the cases are going through liquidation because the buyers are very less, right? There is no competition in the market. Nobody is coming forward to purchase these companies. As a result of this, they are going through liquidation. And for example, Go Air. If you're reading about Go Air, if nobody is willing to purchase, assuming Go Air will go through this, if nobody is willing to purchase Go Air company, please tell me what do you think will happen to Go Air company? Those who are reading newspaper, you should know that, right? In case of Go Air, IBC is happening now. In case of Go Air, actually IBC is happening. Right? That is NCLT has taken up the case. If there are no buyers who will come forward to purchase Go Air, assuming it will go through NCLT, what is the option available for Go Air? And looking at the civil aviation market in India, please tell me, will there be a huge demand for such company in India? Let me know. Please look at the civil aviation market in India. Please look at the civil aviation market. Right? Have a bigger viewpoint, not a narrow viewpoint. Have a very large viewpoint. For example, sir, what do you mean by large viewpoint? Please tell me in the last 2 decades, how many civil aviation companies have been forced to shut down in India? Let me know. Right? In the last 2 decades, how many civil aviation companies have incurred losses forced to be shut down in India? Not even regional players. I'm talking national level players. Can I say Kingfisher, Sahara Company, Air India was on the verge of collapsing only because it was owned by Government of India. It was able to sell it off to somebody else, etc. I'll give you one more example. Imagine the same thing happens in the telecom sector. Do you think that there is a huge demand for these kind of companies in the telecom sector now? Think carefully. Do you think there is a huge demand if one company is going to be brought under NCLT? Do you think there will be a huge demand for this telecom company in Indian market? No. I'll tell you why. No. Please look at last 2 decades. Can I say at least 10 companies in India in the last 2 decades have closed down in the telecom sector? Let me know if I'm wrong. Please correct me if I'm wrong. I'm very happy to accept it. Can I say in the last 2 decades, more than 10 companies in the telecom sector have been closed down because there is no potential of growth. There is no potential to compete with very few companies who are providing the services at a throwaway price, at very, very cheaper prices. Right? That is the reason I'm saying. Right? It doesn't necessarily mean that you take it to NCLT. It doesn't necessarily mean that there is a competition to buy out your company. Absolutely no. Absolutely no. There is no confirmation regarding that. Nobody can come forward, as a result of which you will have to go for liquidation. Okay, done. Now, there is one more important current affairs concept here. Important current affairs concept. NARCL, National Asset Reconstruction Company Limited. National Asset Reconstruction Company Limited. NARCL. Now, before I explain the concept of NARCL, I just want to explain certain important ideas to you. There is a term called as bad bank. There is a term called as bad bank. And NARCL is a bad bank itself. But what do you mean by a bad bank? Imagine bank 1 has certain NPAs, bank 2, bank 3 and bank 4. Imagine all the 4 banks have certain NPAs. Now simple question to all of you. Do you think the banks have expertise? Do you think the banks are experts in resolving these NPAs? Let me know. Do you think the banks are experts in resolving these NPAs? No, answer is no. Don't have any doubt in that. Answer is no, sir. These are not experts. But because there are high NPAs, don't you think that will put pressure on the functioning of the banking sector? The banks will have to forget about issuing new loans. They will have to run behind these NPAs. Now, what will happen? There is a concept called as a bad bank. What is a bad bank? It is a financial institution. Very simple. It is a financial institution which will take over all the NPAs from the banking sector. Very simple idea. Right? They will take over all the NPAs of the banking sector. They will take away, they will purchase all these NPAs from the banking sector. Now, point number 1. If the banks will sell all these NPAs to a bad bank, please tell me what will happen to the balance sheet of the banking sector? Let me know. Simple question to all of you. What will happen to the balance sheet? Don't you think the pressure on the balance sheet of the banking sector will reduce? Right? It will become more clean now. The strength, or let's say the situation in the balance sheet, will improve now. Point number 1. Point number 2, bad bank is an expert in resolving this NPA issue. So don't you think the expert, now the expert is handling the NPAs, not the banking sector. So overall situation in the economy will improve because of the concept of the bad bank. Now come to another concept, asset reconstruction company. Asset reconstruction company. Now, in case of India, we call these as asset reconstruction companies, whereas in Western markets, I repeat, in Western markets, we call these as asset management company, ARC. Understand this carefully. In India, I have not explained what is ARC. Let me explain. Have patience. In case of India, we call it as asset reconstruction companies. In Western market, we'll call this as asset management company. Now, the concept of asset reconstruction company was given for the first time in India by NARCL committee. But over a period of time, private sector ARCs are functioning in India. There are more than 20 asset reconstruction companies. All of them are from private sector. Now, what is the role of asset reconstruction company? Follow this very carefully. Imagine the bank will provide a loan to a company. Company doesn't repay the loan. It becomes a non-performing asset. Now, this loan, that is basically the with collateral of company, the loan account, the bank will be selling this to a company by the name of asset reconstruction company. The bank will be selling this loan account along with the collateral. What is the collateral? Company itself, to the asset reconstruction company. Now, this asset reconstruction company will either try to conduct a resolution of the company, and if it is not possible, right, they will try to change the management, right? They will try to ensure that the company will start performing, having recovery, etc., etc. Or if all of this is not possible, they will simply go for liquidation of the company. This is basically the role of asset reconstruction companies. Now, point number 2, in case of ARCs, the concept of ARCs in India has been present for more than 2.5 decades now. I'll repeat the statement. The concept of ARCs They are present in India for more than 2 decades. Because if you make an observation here, if you make an observation, many of you will basically come to a conclusion ARC is performing a similar function as IBC. Let me know, correct or not? ARC is performing a similar function as IBC. Similar, not the same, similar. Then why? Why is there IBC? Why is there ARC? Please understand this. The ARCs, more than 20 ARCs, I said they are working in India. And it has been more than 2.5 decades since ARCs are working in India. This ARC model is not efficient, has not taken off, has not been working very well in India. And that is the precise reason Government of India said, despite being more than 15 years since the introduction of ARC model, since ARCs are not able to perform very well in the market in Indian economy, that is the reason Government of India went ahead and has set up insolvency and bankruptcy code. Any problem in understanding the evolution here? Please do let me know. Any problem in understanding the evolution? I said concept of ARC, model of ARC was proposed back in 1991, which means ARCs have been working in India for more than 3 decades now. But despite having this model, the model has not been very successful. ARCs do not have sufficient money to handle all these assets. ARCs, right, are not efficient in India. In Western market, these have become very important, but in India, not very efficient. Recovery rates is also very, very poor under ARC. That is the reason Government of India went ahead and proposed the model of, right, NCLT under IBC. Then can we go forward now? Can we go forward? Any issue? Any issue with what we have discussed so far? One concept is a bad bank and the second one is a asset reconstruction company. Why it is called as a bad bank? Because can I say bad bank will handle bad loans? Let me know. Can I say bad bank will handle bad loans? That is the reason this is called as a bad bank. Sir, CRAR is the same. No, my dear. How? Right? How? What is it is same as? Right? Please understand. No, both are different. CRAR, if you are talking about capital to risk weighted assets ratio, it is the capital held by the bank to handle, right? To basically take care of the losses incurred by the bank. Explain bad bank. My dear, if the banks, for example, Canara Bank, SBI, have, right, let's say NPAs, they will sell these NPAs to another institution. I will call this another institution as a bad bank. Bad bank will simply take over, will simply purchase NPAs of the banking sector. That is the reason this is called as a bad bank. Are the ARCs functioning in India? Yes, ARCs still are functioning in India. Okay. Now, let me go to the next one. NARCL. NARCL, National Asset Reconstruction Company Limited. Now, follow these points very carefully. NARCL is often cited in the newspaper. And when I say newspaper, today's Hindu newspaper. Today's Hindu newspaper, I felt only one article was important. That is basically the the first page article where Government of India has imposed a restriction over importing of laptops, importing of PCs. I felt in Hindu newspaper that was the only article which was relevant in today's Hindu newspaper. Okay. And second point, because I'm talking about the newspapers, this is Friday. Today is Friday. So I'll have to give you a list of the articles. Now, I've given the list of the articles from various newspapers in the beginning of this PPT. Point number one, either use this PPT or let's say this annotated PPT, you can use it. But if you feel the quality of the articles, pictures which are given here are not up to the mark, are inferior, etc., a separate link has been given to you. Please use that separate link. The same PPT of these slides, same PPT of these slides, that is newspaper articles, has been given. Right? Please download that. You can use that. right? So if you look at these articles, there is a concept of global minimum corporate tax. Please tell me, did we discuss this week? Let me know, did we discuss this concept of a minimum corporate tax rate this week? Right? What about countervailing duties? What about willful defaulters? Right? What about NARCL, which we are supposed to discuss now? NARCL, right? NARCL federal guarantee, we'll discuss it now. Right? A twin balance sheet problem, just now we have discussed. Right? Banks cost of funds. Yesterday I was mentioning about this article. Let me know. Right? Yesterday I was mentioning about this article itself. Please have a look at this. Banks cost of funds around 1% on higher deposit market borrowing rate. Did we not discuss this yesterday? In the sense, did I not tell you how cost of funds for the banks will be considered? How cost of the funds for the banks, if they start increasing, how lending rate will be increased, etc., etc. Right? So I've given this a point yesterday itself, and regarding that, the article is there. Please go through that. UCBs, today we'll discuss. UCB stands for Urban Cooperative Banks. Educational loans, right? Why educational loans are important? Point number one. Can I say educational loans are part of PSL? Let me know. Right? Can I say educational loans are part of PSL? Yes or no? Yesterday we've discussed this. Point number two. Right? Educational loans are secured or unsecured? Let me know. Right? These are secured or unsecured? These are unsecured. So there is a very recent, right, Kerala High Court judgment regarding educational loans. Please go through this. Pradhana Mantri Janadhan Yojana. Today we'll discuss that. Right? Important concept. Partial reserve. Right? The fractional reserve system, full reserve system. Last week this article appeared in Hindu newspaper. NARCL, again, this is a repetition, don't worry. Several districts do not have any banking presence. Yesterday I was telling you about this. Right? Yesterday I was telling about this. That I said, even today, some of you might be under the impression that every village has a bank in India. I said, no, that is not correct. Right? Even today, a lot of districts in India do not have a banking presence. Certain information is given in this article. Please go through this. Okay? Right? Primary agriculture credit societies, common service centers, etc. Today we'll discuss that. Okay? Done? Okay. 81 bonds. Did we discuss concept of 81 bonds yesterday? Let me know. Did we discuss, right, concept of 81 bonds yesterday? Right? Please read this article. Please read this article. Point number one. And point number two, which is taken as a benchmark in bond market in India. Please tell me, which is taken as a benchmark in the bond market in India. Right? Which kind of instrument is taken as a benchmark, which will have an impact on rates of borrowing and lending in India? Can I say the 10-year bond of government security? Correct or not? 10-year government security bond? Let me prove it today. Let me prove it today. If you can see this, if you can magnify it, please magnify it and read this statement and tell me whether this makes sense or not. Please read this statement and tell me whether this statement makes a sense or not. Let me know. Correct me if I'm wrong. Tell me if this is right. Right? SBI has raised the funds at 8.1%, 91 basis points higher than yield on the 10-year benchmark G security. I hope you understand why 10-year benchmark security is so important. Why earlier I said 10-year G security yield on that will have a huge impact on how much bonds can you issue, right? How much money you can borrow, how much should be the coupon rate, etc., etc. That is the reason I keep on telling you people, read newspapers. Only if you read newspapers, then you will understand. And many of you asked us, sir, please provide week 1 articles as well. In the same link, right? In the same link, right? The week 1 articles also have been provided. Please go through all of it. Okay, please go through all of it. If you're asking, sir, where can I get the link? Right? A link has been posted very recently, just a couple of minutes ago. The link was posted a couple of minutes ago, and even now the link has been posted. You can download using that link. Download, it is basically a PDF of all these articles, week 2 articles as well as week 1 articles. Right? It is public, the link is public. You can simply download and use the articles. And do me a favor. Do me a favor. When I say a favor, you might have understood by now, it's not for me, it's for your benefit. Read these articles. There are around 30 articles for 2 weeks. Read all these articles, then tell me. Next week, then tell me whether these articles are relevant for UPSC or not. Whether these articles, right, can be questioned in UPSC or not. Please tell me. And tell me whether these articles are related to concepts we are discussing in the classroom. Right? Let me know. Let me know. Right? I'm open to any kind of feedback that you provide. Let me know next week. So let me start. NARCL. Right? NARCL. Right? Now, let's start. NARCL, National Asset Reconstruction Company Limited. Point number 1. Can I say NARCL is nothing but type of an ARC? Let me know. Can I say, right, NARCL is a type of ARC, Asset Reconstruction Company. It is there in the name itself. Don't say no. Please do not say no. It is there in the name itself. Point number 2, I am saying NARCL will purchase bad loans, NPAs from the banking sector. I'll repeat. I'm saying NARCL will purchase bad loans or NPAs from at the banking sector. Now, can I say NARCL is a bad bank? Answer to the second question as well. Can I say NARCL is a bad bank? This is the answer to the question to a couple of the students who are asking, give me example of a bad bank. Many students basically said, give me an example of a bad bank. I am saying NARCL will purchase NPAs from the banks. Now, can we say NARCL is a bad bank? Answer is yes, by the way. Even though some of the students are saying, no, my dear, you're wrong. It is a bad bank. Now, what is this NARCL? Let me explain. Let me explain. Point number 1. Right, there are 2 components in the NARCL. Please understand this. Slightly tricky. Slightly tricky. There are 2 components in the model of NARCL. There is one entity called as IDRC, Indian Debt Resolution Company, and the second one is NARCL. Right? We have NARCL, and within NARCL, we have one more authority by the name of IDRC. NARCL, 51% is owned by public sector banks. 51% is owned by public sector banks, and IDRC, 51% is owned by private sector banks. You will understand the importance of this just in a minute. Okay. NARCL is owned 51% by public sector banks, and IDRC 51% is owned by private sector bank. Now, simple question to you people. Simple question. Where do you think decision making will be much faster? Example 1, where, right, public sector ownership is higher or private sector ownership is higher? Let me know. Right, where public sector ownership is higher or private sector ownership is higher? Now, can I simply say, in any entity where private sector ownership is very higher, decision making will be much faster. Correct? Decision making will be much faster, much quicker. That is the reason, please remember, we have 2 entities within NARCL. There are 2 entities in the bad bank. One is NARCL, second one is IDRC. Because Government of India proposed this model of 2 entities. I repeat, Government of India proposed this model of 2 entities where one entity will purchase asset from the bank, second entity will sell the asset in the market. Let me show it to you. Please look at it. A simplified version. The process is very complicated. Do not complicate for GS paper 3. Let's make it simple. Step 1, the bank has NPA. NPA will be sold to NARCL. Now, in NARCL, majority of the ownership is with public sector bank. So, Government of India said decision making might be very slow. You cannot hire expert at market prices. Market prices means higher prices, because it is majorly owned by public sector bank. That is the precise reason what government of India did was, apart from NARCL, where majority of the ownership was with public sector banks, they set up one more authority where majority ownership will be with private sector bank, that is IDRC. So step 1, NARCL will purchase the NPAs from the bad bank, then transfer this NPAs in the step 2 IDRC, and IDRC now will try to conduct resolution of this asset. Either they will try to sell it in the market, or they will try to liquidate this asset in the market. And if they find a buyer in the step 3, buyer will make a payment to IDRC. IDRC will transfer it to NARCL. NARCL will make the payment to the bank. Is there any problem? Any problem regarding the model that we are following here? Is the model complicated? Of course, answer is yes. I am only saying, is the model complicated? Sir, what do you mean by complication here? Reserve Bank of India was opposed to this model. RBI was opposed to this model. RBI said no, don't have two entities, dual entities. Do not have dual entities. Rather than this, have only one entity which will purchase and sell. But Government of India said, if I have only one entity where majority ownership I want to be with the public sector bank, please tell me, you require certain experts here. Correct? You require certain experts. Certain experts are there in the economy. You want the experts. Can you hire these experts, pay high salary package when it is majorly owned by public sector banks? Think of it. Please think of it. Even now, if you're doubtful regarding this, imagine you're hired as a credit relationship manager or credit manager in a public sector bank and in a private sector bank. Please tell me, where do you think your salary will be higher? I hope you understand the argument here, right? Obviously, private sector bank is not bound on any of these regulations. They can offer any kind of a package to you. They can offer high payment to you. So argument was very simple. Government said in NARCL, majority ownership will be with public sector bank. And because of public sector banks, you cannot offer this kind of flexibility. Right? Decision making process would be slower here. That's the reason. Let's have two entities where NARCL will purchase, transfer it to IDRC, and IDRC will sell it to a buyer in the market, make a recovery. Now, point number 2. Many of you will be having a confusion by now, right? You have not asked, but I will ask you on your behalf. Many of you will simply say, sir, there is already IBC. Think of it. There is already IBC, Insolvency and Bankruptcy Code. If there is IBC, then what is the use of NARCL? All of you will agree? If there is Insolvency and Bankruptcy Code, then what is the point of having NARCL? The Government of India's argument is, IBC will take care of NPAs which will be generated now. I'll repeat the statement. IBC will take care of the NPAs which will be generated now. But what about those NPAs which are there with the bank for a period of more than 3 years? What about those NPAs which are there in the balance sheet of the bank for a period of 4 years, 5 years? That is older NPAs. Is the logic okay with all of you? Who is going to handle these older NPAs? They will use the term legacy NPAs. They'll simply use the term legacy NPAs. That is the NPAs which are very, very old, which are still there in the balance sheet of the banking sector. Right? We cannot take them under IBC now because these are very old NPAs. Then who will take care of these old NPAs? That will be handled by NARCL, National Asset Reconstruction Company Limited. So point number 1, 51% of NARCL will be owned by public sector banks. will have an operational entity IDRC. What is the role of that? I've already told you. I'll come to this. Just give me a couple of minutes. Cabinet has cleared a 30,600 crore rupee guarantees program. The bad bank will be taking over and resolving the NPAs amounting to more than 2 lakh crore rupees. 2 lakh crore rupees. Such a huge amount of NPAs will be resolved under NARCL now. Now, what is this idea of a contingent liability? What is this idea of guaranteed program here? Let me start with the example here. Let me start with a very simple example. Imagine you are a bank. Right? Understand this example. Imagine you're a bank and I'm NARCL. Now you want to sell an NPA where the value of non-performing asset is, let's say, 200 crore rupees. Right? You are expecting a recovery. The NPA value is 200 crore. Question number one. Will I offer to pay you 200 crore rupees? Think of it. If I'm an NARCL, will I offer to pay you 200 crore rupees? If I do that, that is a very, very suicidal decision. No, you should not do that. What I will do is, I will offer, let's say, 60 crore rupees. I will basically say, I will purchase this NPA at 60 crore rupees from you. I'll purchase this NPA at 60 crore rupees. Now, NARCL will hand over the NPA to IDRC. IDRC will sell it to a buyer and let's say will recover only 40 crore rupees. Think of it now. Right? Will recover 40 crore rupees. Now, please tell me, can NARCL pay 60 crore rupees using 40 crore rupees? Is it possible? Let me know. Can NARCL pay 60 crore rupees using 40 crore rupees? Is it possible? No, it is not at all possible. So what Government of India says is, government has created a fund where they have kept 30,600 crore rupees. Government of India has created an account where they have kept 30,600 crore rupees. Now, if the realized amount, that is the amount that has been recovered by NARCL, is less than what was promised to the bank. I repeat, if the realized amount means how much they have recovered, if it is less than what was promised to the bank, the balance will be withdrawn. Balance will be given from this 30,600 crore rupees. In this example, how much is the shortfall? How much is a shortage? Can I say 20 crore rupees a shortage here? So this 20 crore rupee shortage will be taken from this 30,600 crore rupee and will be given to the bank. Right? This is how the guarantees that are provided by the government will be utilized. Now, what is the use of this guarantee? What is the use of this guarantee? Don't you think because of Government of India's guarantees, now banks will be more open to selling, clearing all the NPAs in their balance sheet? Let me know. Because of these kind of guarantees, don't you think the banks will be willing more and more to enter into agreement with NARCL to clear all these bad loans or NPAs from their balance sheet? That will promote clearance of the balance sheet. That is the reason Government of India is giving guarantees here. Okay, that is basically the idea. That is basically the idea of NARCL. Okay, now what is the critical evaluation of this model? Okay, right. What is the critical evaluation of this model? Any problem? IR is a better for economy, then why IDRC tries to liquidate? Again, argument is simple. If there are no buyers, what is the point of continuously searching for a buyer in the market? At one or the other point of time, you'll have to decide to liquidate the company. Okay. What is the guarantee concept? I'll repeat it again. Government of India says, I will keep this particular 30,600 crore rupee. Now, if NARCL has promised a certain amount to the bank by purchasing NPA and by selling the NPA, they have not been able to recover this amount, then whatever is the shortfall, whatever is a shortage, that can be taken from this account, that can be taken from this guarantee. Done? That is basically how these guarantees will actually work out. Okay, done. Can we go forward now? What are the good aspects related to NARCL? And please understand, this is a very new model in India. Trust me, this is a very, very new concept in India. NARCL is a very new concept. For example, right, many of you ask me, sir, right, how efficient it has been now, right, how effective it has been now. Let me prove it to you. Right, have a look at this article. Please have a look at this article. I've given this article, right, for this year. This is the first year for the NARCL. This year, NARCL, right, for financial year 23, this year they were supposed to acquire 90,000 crore worth of assets, NPAs. This year, NARCL was supposed to acquire 90,000 crore worth of assets. How much they have been able to acquire? How much they have been able to acquire? They have been able to acquire only around 21,000 odd crore rupees. They have been able to acquire only around 21,000 odd crore rupees. Why? Please understand the logic behind it. Imagine you're a bank. I'm NARCL. I'll come to you. You have an NPA of, right, let's say 200 crore rupee. I will offer 60 crore rupee. One more ARC will offer 70 crore rupees. Don't you think there's a very stiff competition? Simple. Let me know. Don't you think there's a very stiff competition? Right, then you might simply choose to sell this, right, the NPA, right, to another ARC, not to NARCL. Or what if I am offering 20 crore rupees to you? I am offering 20 crore rupees to you, right? And as a bank, you feel this is very, very less. This is very less. You will decide not to sell the NPA to me. So I hope you understand there are so many issues regarding the functioning of NARCL in India. Right, it's just a very novel concept which has been introduced by government of India. Done. So what are the good aspects related to the model of NARCL in India? What are the the objectives of the benefits or objectives of NARCL? Now, first point number one, right, NPAs or stressed assets will be parked into only one entity. They'll be transferred into one entity. Right? Don't you think that will provide benefit to the banking sector? Let me know. Don't you think that will provide benefit to the banking sector? Second, banks can now focus on their core activities, that is collect a deposit and give loan. Mobilize means collect a deposit and give loans rather than running behind NPA. The balance sheet of the banks will become more clean now. Now, with the new balance sheet, right, with a better balance sheet, they can go to the market and borrow more from the market, issue more bonds, issue more shares, etc. Now, initially, NARCL will focus on large value loans. I'll repeat the statement. Initially, NARCL will focus on large value loans. Large value loans means, imagine a bank has two NPAs. One NPA is worth 100 crore rupee and another NPA is worth 800 crore rupee. Don't you think it makes better sense to resolve a bigger value NPA first, then focus a smaller value NPA? Yes or no? Please do let me know. A bank will have multiple NPAs, large value NPAs as well as small value NPAs. What makes more sense, economic sense? Resolve bigger value NPAs first, then target lower value NPAs. Initially, the focus will be on large value NPAs of more than 500 crore. Later, lesser valued NPAs will also be considered by NARCL. Okay. Now, having said so, what are the concerns? Having said so, what are the concerns? What are the issues related to model of NARCL? Point number one, this is a very good reform. Right? Understand the statement. This is a very good reform, but this reform will take care of the problem. This is not a reform which is proactive. It is a reform which is reactive in nature. What do you mean by this? Please understand the concept here. This reform will address the issue of NPAs. This is not a reform which will reduce the creation of NPAs. So please tell me, if the reforms are implemented, don't you think reforms should be reducing the creation of NPAs rather than a reform which will address the NPA? Sir, what do you mean by reduction in the creation of NPA? For example, don't you think banks should implement better policies whenever they are giving loans to borrowers? Better policies in the sense what? If a company which has already borrowed huge amount of money, do not provide it more loans. If you are going to provide a loan, just conduct a thorough analysis of the borrower. Does it make sense or not to you people? Please think of it. Third, there is a term called as evergreening. There's a term called as evergreening. Right? What do you mean by evergreening of loans? Follow this very carefully. Very recently, this is there in the current affairs. Right? RBI governor talks about evergreening. Now, what is the concept of evergreening here? Evergreening simply means a bank has given loan to a customer. Now, the customer is not able to repay this loan. The customer is not able to repay the current loan. Now, if the customer doesn't repay, the loan will be declared as a NPA. The company will be dragged to NCLT. Rather than this, the bank will give new loan to a customer. The bank will give new loan to the same customer, and this customer will use the new loan to repay existing loan or old loan. This is called as a evergreening of loans. Is the concept okay with all of you? I hope you understand this. Is the concept okay with all of you? That is, bank already has given a loan, borrower is not able to repay, bank will give another loan to the customer, same customer. Now the customer will use the new loan, the amount in the new loan to repay old loan. This is called as evergreening of the loans. Evergreening of the loans. And understand this. Why is the bank doing it? If the bank does it, can I say NPAs reported by the bank would be lower? Correct or not? Please let me know. NPAs reported by the bank would be lower. Otherwise, they should have declared this customer's account as NPA. But because the customer has repaid, NPAs would not be higher. NPAs would be lower. But don't you think they are simply hiding the quality of the loans? Think of it. They are simply hiding the quality of the loans. Because if the customer doesn't repay in the future, don't you think the NPAs for this bank will be much, much larger? Think of it. If the bank has declared it as an NPA today itself, only one loan would have become an NPA. But by evergreening, customer, if they don't repay, now don't you think after 5 months, after 8 months, after 1 year, 2 loans of the banks will become an NPA? Right? So that is a problem. That is a problem. RBI governor also says there is an evergreening problem in India. The banking sector, there is an evergreening problem. Now, please tell me, NARCL, right, for that matter, is it a reform to address evergreening? Don't you think we should implement more and more reforms to address these kind of problems which will create NPAs? But NARCL is a reactive one. Reactive one means that basically loans have become NPA, and after the problem has been created, we are using a reform. Right? So it is a reform which will address issue of NPAs, which is reactive measure, not a proactive one. Second one, because the government will start providing these kind of guarantees, don't you think banks will become very much relaxed now? Think of it. Right? If the bank comes to know that even if I evergreen, it becomes an NPA, NARCL is there, I will sell it to NARCL. Even if NARCL has a lower recovery, bank guarantees are there. So don't you think this is actually promoting bad behavior of the banks? Right? This will promote complacency from the side of the banks. Third one, recovery on the loans which are supposed to be sold through NARCL. How much recovery will happen? This is very doubtful. Why? These loans have remained NPA for a very longer duration. Whether there will be demand for such loans in the market, it is very much doubtful. Even if there is a demand, how much will be the recovery done? That is also doubtful. So these are some of the very important concerns regarding the model of NARCL, right? National Asset Reconstruction Company Limited. Dodgy loan, best example is evergreening. Dodgy loan means loans where the repayment is doubtful. Right? For example, evergreening of loans. Can we go forward now? Arey Baba, why is evergreening done? Did we not discuss it? Hardly 2 minutes are over. Hardly 2 minutes are over. Why evergreening is done? I told you just some minutes ago. The bank will be masking the quality of the asset. Right? The bank will not be showing how much is the true NPAs. A bank will be hiding their NPAs. Recovery of the loans, right? Because these are NPAs for 5 years, for 7 years, etc. How much money you will be able to get by selling this in the market, it is doubtful. There might not be any demand for such loans. Okay. Can we go forward now? Now, before I go to cooperative structure, right, let me take a break. But before that, let me address your questions. It is often said that most government reforms in economy take at least 5 years to show dividend. Is it true? Not necessarily. Sir, can government file any charges on loaners who pay the loan but still choose? Who can government file any charges on loaners who can pay the loan but still choose to repay installments? I believe you are asking exactly opposite. Not repay the loans. So can government file a charge? Government, no. Banks can approach NCLT, banks can approach a DRT. Okay. What is NM1, NM1, NM2, etc.? These were called as new money. New money 1, new money 2, liquidity 1, L1, L2, L3. Right? These are very, very big concept. Don't worry. M0, M1, M2, M3, M4 are more than sufficient. Sir, giving from 30,600 crore to bank for NPA is not money from legit taxpayers. How this can be justified? That has been, again, it's not just only in this case. That's always been the criticism. Government uses taxpayers' money. Government uses taxpayers' money. Right? So whenever government uses taxpayers' money for this or for providing, let's say payment to Air India, etc., this always has been a criticism. Right? You are using taxpayer money for bad decision making. Okay, done. DRTs are for individuals also. DRTs are for individuals. What is a full reserve banking? Full reserve banking simply means whenever the bank will collect deposits, out of these deposits, and now in partial reserving or fractional reserving, we can use demand deposits as well as the time deposits to create loans. But if you simply say full reserve banking, in such cases, demand deposits will not be utilized. Only time deposits will be utilized to create loans in the market. Okay. So from where government will get the money for guarantees? Taxpayers' money. Is not evergreening loss for a bank? Not necessarily. I'll give a very simple example. Why do banks keep on providing loans to these kind of borrowers? The answer is very simple. What if I'm a very good customer for the bank? Only for, let's say, next 3 or 4 months, my business is incurring a loss. After that, what if I recover very well? What if I start making profits? So that kind of a argument can also be made for the bank to provide loan to the existing borrower like this. Haircuts simply means how much is the sacrificed amount of recovery. You have given a loan of 100 crore, you are able to recover only 30 crore, you have taken a haircut of 70 crore rupee. You have sacrificed out of it 70. Sacrifice means your losses are 70 crore rupees. Why did RBI oppose a private and public in NARCL? The RBI opposed because RBI was of the viewpoint that there should not be two entities, one to handle, one to sell. There should be only one entity to purchase and sell. That is the argument. Are there multiple NARCLs? Who said? Did I ever say there are multiple NARCLs? I said one NARCL is there. This can compete with other ARCs in the market because other ARCs are also still functioning. Okay, done. So let's take a break now. We'll restart the discussion at 8:15. We'll restart the discussion at 8:15. Take a break. Okay. Let's start. Cooperative banking structure or cooperative banks in India. Important for UPSC exams. Questions have been asked. You follow the discussion very carefully. But before I go forward, please do let me know. Did everyone receive the link for the newspaper articles? Let me know. Has everyone received the link for newspaper article? It was right basically pasted multiple times in the last 15 to 20 minutes. Those who are saying no, please observe. Please observe your comment section. There is a link, right? Download it. Now, when I gave a break, I don't know how to save. My dear, it's a PDF. Download it. Right? I cannot come to your home now and teach you how to save a PDF document. Right? That is not my duty, my dear. You'll have to save it. Okay. Please download it and don't say the link is not working, etc. I checked it during the break. I have checked it during the break. Right? The link is working perfectly fine. But during the break, I was just going through the comments. There were two students who gave a very interesting take on the articles. Their argument was the pictures are not very clear. My dear, why? Why do you worry about the clarity of the pictures? Please zoom in. Can you read the articles? Let me know. Right? I've checked everything. I zoomed in, I downloaded, I saved, I've done everything. Right? The students were basically saying, sir, right, the pictures are not very clear. My dear, why? Why do you require the clarity of the picture? Right? You don't require HD version of the pictures. If the words are not clear, please zoom in. You will have a look at it. Right? So the question is simple. UPSC will not ask you whether the PDF that was given to you was HD quality or not. UPSC will not ask you that. And you should not be worried about it. What you should be worried about is, are you able to understand the articles? That should be your agenda, not HD clarity. Okay? Let me start. Are Baba, right? If don't be too much dependent, right? Again, there are some students over dependent, not just dependent, over dependent. So tell me date, tell me what is the gist of the article, tell me right which date it appeared, tell me which newspaper. I've already written it in the top. If you are not able to read, then that is not my problem. What is the title of this right article? What is the title in this slide? Mint, right? It means it is from Mint newspaper, right? Second, what is the title here? Mint newspaper. What is the title here? Business Standard. What is the title here? Financial Express. What is the title here? Economic Times. Sir, give me the title of the newspaper. Are Baba. Right? Don't be too much dependent. Right? The problem with, again, I understand, sir, there are multiple newspapers. How should I read? That's the reason I'm giving you the snippets. Imagine you become a district collector, suddenly the floods will happen. People will look at you, your officers will look at you. Can you say, let me look into my syllabus? Let me see. My faculty did not teach me how to control floods. No, right? Start becoming right Atmanirbhar. Right? You want to become IS officers, IPS officers. Start becoming self-reliant, my dear. Okay, let me go to the next one. Let me go to the next one. The concept of cooperative structures. Okay, concept of cooperative structure. Point number one, What do you mean by cooperative? Cooperative simply means it is a group of at least 10 people. It is a group of 10 or more people above the age of 18 years. I'm defining what you mean by cooperative here. Cooperative simply means it is a group of 10 or more than 10 people who are the above the age of 18 years who have come together to achieve a common objective. To achieve a common objective. What do you mean by common objective? Let me give you certain examples of cooperative. You only can tell me what is their objective. Have you heard of a cooperative by the name of Amul? Please do let me know. Have you heard of cooperative by the name of Amul? The best cooperative that you can think of right in India today. The best example. What is the objective of Amul? Can we simply say to pull in resources from the farmer, that is basically milk. To purchase a milk, to increase milk production, to help farmers in producing more and more milk and market the milk products. Right? So Amul is the best example. Have you heard of IFCO? If you have not heard of it, it simply means you are not reading newspapers correctly. I'll prove it. If you have not heard of IFCO, you are not reading newspapers correctly. Why do I say that? IFCO in the last 1.5 month was very often cited in every newspaper. Why? It is a fertilizer cooperative. It is a fertilizer cooperative, right? In case of fertilizer, in the last 1.5 month, right, or let's say 2 months or 3 months, have you come across nano urea, nano DAP, etc., etc.? All of this is associated with IFCO itself, right? So there are milk cooperatives in India. There are right fertilizer cooperatives in India. There are sugar cooperatives. There are sugar cooperatives in India. There are textile cooperatives in India, etc. Right? So understand the argument here. There are a lot of cooperatives in different sectors which are present. Point number 3, cooperatives can be present within only one state or in multiple states. Cooperatives are operating within one state and they can be operating within multiple states as well. Right? You will have examples of both of them. They can work in one state also, they can work in multiple states also. But the point is simple here. Whenever they are working only in one state, right, these are called as a single state cooperative, and they are working in multiple states. These are called as multiple state cooperative. And when these are single state cooperative, it will come basically under the state government. The single state cooperatives will come under the state government, regulation of the state government. And when this is a multiple state cooperative, the regulation of it will come under the central government. Under the central government, single state or multiple state. Now, whether it is under the state government or central government, government will directly not intervene here. What they will do is, right, have a look at this. What they will do is, the state government will set up one authority by the name of Registrar of Cooperative Societies. Registrar of Cooperative Societies, RCS, Register of Cooperative Societies. Now, central government also has one authority, RCS. So, state governments individually, they will set up one authority, RCS, and central government also has an authority, RCS. Now, it is this authority which will have certain right powers into the cooperatives. Now, what kind of powers? That comes to the fourth point, very, very important point now. Listen to this very carefully. I said a cooperative is nothing but group of people coming together. Correct? I repeat. Right? Cooperative is nothing but group of people, 10 or more than 10 people who will come together. Now, let's say there's a cooperative, right, which has 1,000 people as members. There are 1,000 people who are members. Now, please tell me, think of it. Please tell me, is it possible for all the 1,000 members to come together and take decisions on everyday basis? Let me see. Do you think all the, let's say, lakhs of farmers who are members of Amul, they will go every day to Amul office They will sit, they will discuss, and they will take decisions for Amul company. It's impossible. All of you will agree it's impossible. So what will happen? What will happen then? Generally, there is a concept of elections in the cooperatives. There is a concept of elections in the cooperatives. That is, the members of cooperative, they will be participating in the election, they will vote, and they will appoint people. They will elect people to basically operate the cooperative. Any problem in understanding this model? Let me know. Right, that is basically the elections are conducted, and right, members are elected, and these members will have to take care of operations of the cooperatives. Please remember this point. Now come to the next important point. Imagine there is a cooperative bank. This is important. Imagine there is a cooperative bank. Now if members are elected and these members are supposed to take decisions for this cooperative bank, what if these members do not have expertise in banking sector? Possible? Is this situation possible? Right, the cooperative bank is set up, members of the cooperative bank will elect, let's say, 5 people, 10 people to take care of this cooperative bank. What if these members do not have any expertise in the banking sector? Don't you think this is very risky cooperative bank? Risky in the sense, decision makers do not know how the bank operates. Do you think the same situation exists in public sector bank? Think of it. Do you think the same situation exists between, right, the private sector banks? No. Right, public sector bank, government will appoint people who are experts in the banking sector. Private sector bank, if expert is not appointed, RBI will not allow him to or her to work as an expert. RBI plays a very important role here. So argument is, on one side we have public sector bank, private sector bank, right? Basically scheduled commercial banks, other scheduled commercial banks, where RBI can interfere and say, no way, the person doesn't have any expertise, we will not allow them, right, to operate as a chairman, will not allow them to operate as a CEO, will not allow it. Can I give you a current affairs example? Have you read regarding HDFC bank, right, head now? Right, the HDFC bank, it is yet to get clearance or the approval regarding, right, who should be appointed as the chair or the head of the HDFC from RBI. If you don't trust me, please check it in Google now. Check it in Google. You will get to know. HDFC says we are yet to get the approval from RBI regarding who should be our, right, head of the bank now, which means RBI plays a very important role. RBI can control. RBI can simply say, okay, I will not allow this person to work as a chairman. I will not allow this person to work as a CEO. I will not allow it. Right, because RBI is a regulator, the banks will have to follow the guidelines. Right, I'll give you one more example. Right, listen to this. Again, don't write this. Mr. Rana Kapoor was basically the CMD of Yes Bank. Have you heard of this person? Mr. Rana Kapoor, Yes Bank. Right, engulfed in scam now, engulfed in crisis. Mr. Rana Kapoor was the head of the Yes Bank. Right, a very well-known banker in India, very well-known banker, one of the experts. But when Yes Bank incurred huge amount of a loss, and Yes Bank had to write off the additional tier 1 bond, RBI said, I will not allow Mr. Rana Kapoor to continue as the chairman. I will not allow Rana Kapoor to continue, right, interfering in the functioning of Yes Bank. And as a result of that, he had to be removed. Again, don't write all of this in the example. All I'm trying to convince you people is very simple. RBI plays a very important role in these kind of banks whenever the heads are supposed to be appointed. Whereas in case of cooperative bank, the members are elected. The chairman, etc., the board is elected. And the board will take decisions for the bank. What if the board is not having any kind of expertise? then don't you think they are playing with the money of the customers? They are playing with interest of the customers. Right? Remember this carefully. Remember. Now come to the point number 6. Point number 6. Can I say on one side there is a register of cooperative societies which looks after registration of the cooperatives, which looks after, right, the board members within the cooperatives, etc. And also there is a Reserve Bank of India which looks after the banking activities of cooperative bank. I'll repeat the statement. Right, there is a register of cooperative societies which looks after, right, registration of cooperative bank, right, how many members are there in the cooperative bank, right, how the elections are conducted in a cooperative bank, etc. On the other side there is Reserve Bank of India which will regulate the banking aspect of a cooperative bank, because it is a bank. Because it is a bank, RBI has to intervene, RBI has to regulate the banking activities. Now please tell me, can I call this as dual regulation? Let me know. Can I call this as a dual regulation system? There are two regulators. There are two regulators. One is the management aspect of a cooperative bank, RCS. Another one is the banking activity of a cooperative bank done by RBI. Two regulators. Dual regulation. Don't you think dual regulation is not good for any kind of a system? Two regulators regulating only one entity, don't you think that is bound to create certain conflicts? That is bound to create certain gaps in the regulation. Remember this point as well. Right? Why you'll understand in some time, remember this point as well. Now come to this picture. What is the concept of cooperative banking structure in India? Right? Cooperative banks can be divided into two parts, urban cooperatives and rural cooperatives. Urban cooperatives can be divided into scheduled as well as non-scheduled. This can be further divided into single state and multi-state cooperatives. Come to the right side, rural cooperatives. Come to the right side, rural cooperatives. Rural cooperatives are divided into two parts here. One is based on, right, understand this, based on the kind of lending activity that they do. Understand this. On what basis they are divided into two types here? Based on lending activity. For example, the agriculture loans which are given by rural cooperatives can be for short duration, can be for medium or long duration. I'll repeat the statement here. The agriculture credit given by these cooperatives can be for a shorter duration, can be for longer duration. Again, what is a short duration loan, long duration loan, what is a medium duration loan? By what, right, basis we will find out whether this is short, long, in what reasons they are issued, for what causes they have issued. All of this will take it up when I take up agriculture sector. But right now, please understand the distinction here. Based on lending, whether the loans are given for short duration or medium or long duration, we will have two divisions here. That is basically one is for short, one is for a long duration. Right, have a look at this. This structure will provide short-term loans to agriculture sector, and this side they will provide a long-term loans to agriculture sector. Right, this is basically having three level cooperative banks. One is a state cooperative bank, second one is a district central cooperative bank, third one is a primary agriculture credit society, PACS, primary agriculture credit societies. Now please tell me, earlier anywhere have you come across PACS, either in the newspaper or in the classroom? Let me see how many of you are revising. Earlier, have you come across a PACS, Primary Agriculture Credit Societies? Sir, yes, you should say yes. Two reasons. Yesterday, in discussion of DICGC. Correct? Yesterday, in the discussion of DICGC, I said, under the discussion of DICGC, I said, any deposits collected by the primary agriculture credit societies, these will not be covered. These will not be covered under insurance. Why? These are societies which are registered under the Cooperative Societies Act. These are societies. These are not banks. These are societies. Right? So this is the three-level structure in case of a short-term loans given to agriculture sector. And this is the two-level structure in form of long-term loans given to agriculture sector. We have state cooperative agriculture and a rural development bank. And below this, we have primary cooperative agriculture and a rural development bank. And these kind of cooperative banking structures, please remember, although they come under the regulation of RBI, RBI has set up one more authority. There is one more entity under the regulation of RBI. I repeat, these kind of cooperative structures, no doubt, will come under the regulation of RBI. There is one more entity under the regulation of RBI by the name of NABARD. Right? It is a NABARD which will directly look into the cooperative banking structure in India. It is the NABARD. It is the NABARD which will look into, right, these kind of rural cooperative structure in India. NABARD will again come under regulation of RBI only. I hope you understand. Right? NABARD will look into rural cooperatives, but NABARD will come under regulation of RBI. Okay. So this is basically the structure. There was a couple of students who were asking me, sir, should we remember the structure? My recommendation, please do remember. Right? My recommendation to you people is, please do remember this cooperative banking structure. Why? Very often this is there in the discussion. Very often this is there in the discussion. Right? That is basically the concept of a cooperative structures in India. Now, what are certain important points related to this? Cooperative banking in case of India was brought under the regulation of Reserve Bank of India. Was brought under the regulation of Reserve Bank of India, right, in 1966, when Government of India amended, Banking Regulation Act of 1949. And Government of India stated, any cooperative bank which has a paid up capital, I'll come to this, just give me a minute. Any cooperative bank which has a paid up capital of more than 1 lakh rupee should be brought under the regulation of Reserve Bank of India. Now, what is this paid up capital? What is the concept of a paid up capital? Paid up capital simply means, imagine here is a company. Imagine here's a company. The company has issued shares, and when the company will sell the shares, they will collect money. Any problem with this? I'll repeat it again. The company will sell the shares, will issue the shares in the market, will collect money. This money which has been collected, this is called as paid up capital. Very simple idea, do not complicate it. Right? This money which the company will collect by issuing shares in the market, this is called as paid up capital. There is one more name for this, do not get confused here. This can also be referred to as paid up equity capital. They'll also refer to this as a paid up equity capital. Equity refers to shares. Equity refers to shares only. Right? So paid up capital, that is any cooperative bank which has right paid up capital of more than 1 lakh rupee will come under the concept of cooperative banking. Now, before I go forward, right, you may not get this doubt now, but later you will get it. Sir, what is the share in concept of cooperative banks? Right, we have heard of Adani shares, we have heard of right, let's say Tata shares, we have heard of Paytm shares. What is the paid up capital in case of cooperative bank? Right, whenever you talk about cooperatives, not just bank, any kind of cooperative, is it okay if I say 1,000 people will come together and set up a cooperative? Point number one. Any problem with point number one? 1,000 people, let's say, have come together and have set up a cooperative. Now, all these are nothing but members of the cooperative. Correct? All these are members of cooperative. Now, all of them will have to contribute to set up a cooperative. Very simple. All of them will have to contribute to set up this cooperative. Now, can I simply say the money contributed by 1,000 members is nothing but the paid up capital for the cooperative? Let me know. Right? And these members are also referred as shareholders in a cooperative. These are also members, nothing but shareholders of the cooperative. Right? So this is nothing but the paid up capital for cooperative. Now, come to the next point here. Right? While the state register for cooperatives is responsible for monitoring and administration of a bank, the Reserve Bank of India will regulate the banking functions. RBI will regulate banking functions. And that is the reason I said, right, this is nothing but will lead to the concept of dual regulation. Will lead to the problem of dual regulation. And there have been instances in India. There have been instances in India where cooperative banks have incurred huge amount of losses because of the mismanagement, because of the corruption, because of the election system. There have been a lot of these cooperative banks which have incurred huge amount of losses, right? Which is nothing but they are putting the money of the depositors at a very high amount of a risk. I'll give you one current affairs example. Have you heard of Punjab Maharashtra Cooperative Bank? Let me know. Have you heard of Punjab Maharashtra Cooperative Bank? If you have not heard of this, right, just type it in the Google, you will come across this. In short, PMC, Punjab Maharashtra Cooperative Bank is nothing but a PMC bank. Right? Why this was there in the newspaper? This was one of the largest multi-state urban cooperative bank in India. I'll repeat the statement. PMC Bank, right, a couple of years ago was one of the largest multi-state cooperative bank, urban cooperative bank in India. And it incurred huge amount of losses. It incurred huge amount of losses. The customers' deposits, RBI did not allow the customers to withdraw deposits from the bank. Right? RBI put certain restrictions over withdrawal of the deposits. So that was the reason why government of India felt that because of the dual regulation, right, the banking structure, that is urban cooperative banks or rural cooperative banks, might be might be facing lot of risk. They are taking lot of risk, right? The experts may not be present in the bank. The board is elected. The elections will lead to certain right people monitoring or managing the bank, but they may not have right amount of knowledge regarding how banks will operate, etc. That is the reason in 2020, the PMC happened in 2019. Government of India amended Banking Regulation Act in 2020. Then the PMC happened in 2019 like this, and Government of India amended the Banking Regulation Act in 2020. Now, what was the amendment? What powers were changed? What changed under the concept of cooperative banking with these amendments? Let's try and understand one by one. Point number one. Now, Reserve Bank of India has been given the powers. Now, Reserve Bank of India has been given the powers over the management of cooperative banks. Look at this. Earlier, who had the power over management functions of the banks? Cooperative banks, by the way. It was Register of Cooperative Societies. Now, RBI will be given powers over the management of these banks. RBI will be given more power. How? Understand this very carefully. There is already a board of directors, right, which is elected. Chairman, etc., is there in a cooperative bank through election. But what happens now is RBI will ask these cooperative banks to set up one more authority by the name of Board of Management. Understand this carefully. There is already Board of Directors. Right? The Board of Directors are elected. There is already Board of Directors who are taking the decisions for cooperative banks. But the concern is that Board of Directors may or may not have any kind of experts in the banking sector. So should they be allowed to continue to operate these banks? Don't you think certain experts should be there who will assist the board of directors, who will supervise the board of directors? That is the reason now RBI says, under the Banking Regulation Act, RBI says every cooperative bank should have board of management. Now have a look at this. Board of management will have minimum 5 people, maximum 12 people. And these minimum 5, maximum 12, right? Please understand, these will consist of experts. These will consist of experts in the banking sector, right? They should be experts in the banking sector. And who will set up this board of management? It is the board of directors. It is the board of directors who will set up the board of management. Now there is a concern, right? That is, let's say I'm one of the board of directors. I will appoint my nephew as a board of management member. This nephew does not have any expertise, but because I'm a part of board of director, I'm very influential person, I'm a politician, I will appoint my nephew, son, daughter, anybody into the board of management. RBI says if anybody has to be appointed in the board of management, first they will have to take my approval. RBI simply says first they will have to take my approval. If I approve, only then this person shall be appointed into the board of management. Right now, don't you think RBI will ensure that only experts will be appointed into the board of management? What is the role of board of management now? Board of management will exercise right control over banking functions of these cooperative banks. I've written UCB here. UCB means urban cooperative banks, right? Mainly targeting urban cooperative banks. Even cooperative banks in a rural area will also be covered under this. So the board of management will basically have control over bank related functions which are conducted by board of directors. In simple, RBI is trying to ensure experts will be right driving the decision making of cooperative banks, not elected personnel, not the elected people, but the experts in the banking sector. So these are certain functions, right, or powers. Let me go forward. RBI also has been given the power to supersede a board of directors. That is, there is a decision making authority in the cooperative bank, but they are not taking right decisions. Their decisions are leading to losses of the cooperative banks. RBI simply says, you don't take any more decision. I will take the decisions now. RBI can simply supersede. Supersede means overtake. Overtake the board of directors. RBI will appoint personnel or that is experts. Now these experts will start taking the decisions for cooperative banks. Next, there is also a provision now wherein the cooperative banks can go to the market and issue bonds, issue different types of bonds in the market, raise capital, issue different types of shares. For example, please understand, right? I've written one statement here. Do not start asking questions on this. Please observe the statement. What is the statement I've written? We'll discuss the concept of shares when I take up financial market chapter. So concept of shares, so for example, these, that is cooperative banks can go to the market, issue preference shares, issue equity shares in the market and raise the capital. Now this is allowed. This is allowed, right? The cooperative banks can go to the market, issue these types of shares and raise the capital from the market. It will be allowed now. Now, what is a preference share? What is equity share? Have patience. We will discuss this when I take up a financial market. The Reserve Bank also has been empowered to basically force the cooperative banks into a merger. Right? For example, let's say there's a cooperative bank A, cooperative bank B. Right? These are not functioning very well. Let's say cooperative bank A is continuously incurring losses. Now, under that, RBI can propose that A should be merged with B. A should be merged with B. RBI can propose it. Give the proposal to Government of India. Get the proposal approved. Then simply force merger of A into B. That is basically the last point here. So these are the different powers which have been given to Reserve Bank of India under the Banking Regulation Act of 1949, which was amended in 2020, in regards to regulation over cooperative banks. Now, please tell me, having looked at all of this, can we come to a conclusion? Now, regulatory power over cooperative banks is with RBI. Let me know. Having looked at all of this, can we say regulatory power over these right cooperative banks is with RBI? Amending Banking Regulation Act for UCB. It's UCB. Is it for UCB only? No. I have written the term UCB. It can be. It can be for other cooperative banks as well. Is amalgamation and merging same? Amalgamation means joining. Merging means right. You will be merged into another entity. The entity into which you are getting merged, that entity will have the existence, not you. Okay. What is paid up capital? Repeat it again. Company will issue shares, collect money. Hey, Baba, it's very simple. Company will issue shares, collect the money. That money is called as paid up capital. Okay. Can we go forward now? Any difficulty? Right. We are almost at the end of banking chapter. Couple of more concepts are there. Couple of more concepts. Right. Small concepts are there. That will be end of the banking for you. Any difficulty so far? Sir, on what basis urban cooperatives are divided? Whether urban cooperatives are present in one state or multiple states, whether urban cooperatives are scheduled or unscheduled. Right, on that basis, we have right the classification of urban cooperative banks. Paid up capital is only 1 lakh. Those cooperatives which have paid up capital of more than 1 lakh have been brought under the regulation of RBI. Can cooperative banks be split up as well? In what context? In what context? Split up how? For what purposes? You're talking about RBI. RBI will not split up cooperative banks. Okay. Last point in merging part. If cooperative banks are not performing very well, RBI can bring out a proposal where this cooperative bank can be merged with another bank. That's a basic idea, right? Get the proposal approved from the central government and force the merger in the cooperative banks. Okay, done. Let me go to the next concept, regional rural banks. RRBs, right? Regional rural banks. Now, what was the concept? Why did we set up RRBs? Right? Let me explain. Let me explain the historical underpinnings to this. Back in 1970s, right, there was a concern that in a rural part of India, sufficient amount of credit is not flowing. I repeat, in 1970s, right? Don't say, sir, right? Nationalization happened, etc., etc. Nationalization happened in which year? Please tell me. Nationalization of the banks happened in which year? 1970. And you are talking about 1975. Not much of a difference. So during 1970s, there was a concern. There was a concern that sufficient amount of credit is not reaching rural part of India. Farmers are not getting access to sufficient institutional loans. Right? Industries, small manufacturers, traders, painters, etc. in a rural part of India, they are also not getting access to the banking loans. Right? The agriculture sector, right? Agriculture sector, we are promoting green revolution. It is not getting access to institutional loans. That is the precise reason Government of India set up a committee to look into how much is the problem of credit in a rural part of India. To what extent credit shortfall is there in rural part of India and what should be done. And this committee is NARCL committee. So NARCL committee studied and gave a recommendation that we should set up certain banks specifically targeting rural part of India. I repeat, we should be promoting certain types of banks which will target providing loans, providing credit in a rural part of India. And that is how Government of India introduced the concept of RRB, Regional Rural Bank. RRB simply stands for Regional Rural Bank. So Government of India, after looking into the recommendation of Narsimham Committee, started promoting the concept of RRBs. They even passed a bill, Regional Rural Bank Act. Right. So under the concept of RRB Act now, post 1975, we have started promoting setting up of RRBs. Now, what is the speciality about RRB? Right. Many of you will ask me this. Let me address it ahead. What is the speciality about these RRBs? There are also nationalized banks. Why RRBs were promoted? Simple question to you people. Please let me know. State Bank of India, will they set up more branches in cities or villages? Let me know. Right, or for that matter, Punjab National Bank, PNB, Punjab National Bank. Where do you think most of right the branches they will target? Will they target urban population or will they target rural population? So don't you think public sector bank or private sector bank, right, whether nationalized or not nationalized, they will target more and more of cities only. Now, argument was we will ask the RRBs or these new types of banks to be located in a very small region. We will ask them to be located in very small region. We will ask them to open their branches only in one or two districts. That's it. We will ask these urban cooperative banks to operate in one or two districts. Will not allow them to go beyond these districts. Why? If they start opening branches in multiple districts, right, again, don't you think the problem will continue to remain? They will target cities, they will not start targeting villages. But imagine, RBI will give you a banking license, but RBI says you can open, right, let's say 20 branches, but within one district. Think of it. You can open 20 branches, but within two districts. What is the outcome of this? Don't you think because of this, penetration into rural market would be higher? Yes or no? Does it make logical sense to you? Right? Penetration into rural market would be higher. So that is the reason Government of India introduced the model of regional rural banks, RRBs, and they were asked to operate within one or two districts. That's it. They were not allowed to go beyond these districts, so that more and more branches, more and more banking services will start getting penetrated to rural part of India. Right? So the model of RRB was promoted in India post 1975. But next point is important. If you are asked to open an RRB, will you be interested to open RRB? Think logically as well. I will ask you to open an RRB. I'll give you a banking license, but I will ask you to open an RRB. Don't you think you'll simply say, sir, it is very risky for me to open RRBs? Why? You are asking me to be present only in one or two districts. You are not allowing me to expand beyond these two districts. And point number three, you are asking me to enter into rural part of India where people will take a lot of loans. Farmers will take a lot of loans, right? My cost of operations will be very high, but I might not be earning sufficient amount of returns. They might, right, not repay the loans. I might be having higher NPS, etc. Right? So there was a concern. There was a concern that if RRBs are promoted, right, banks will not be interested to open RRBs, or nobody will be interested to work as an RRB. That is the reason, understand this carefully. Government of India said, when we are going to open RRBs, right, please understand this, half of the contribution will come from us. Central government said, half of this contribution, I will give it. And that is the precise reason we identified certain banks, right? We identified certain banks such as public sector banks. Have a look at this. We identified certain banks such as public sector banks who were asked to open RRBs, and half of the money to open RRB came from Government of India. Half of the money actually came from Government of India, and remaining was from the state government as well as right the public sector bank, which were referred to as a sponsor bank. Which was referred to as a sponsor bank. For example, have a look at this. State Bank of India. State Bank of India as of 31st March 2022. Again, this is old data. From 1 year to next year, the data will keep on changing. Please do not buy heart the logic. Do not buy heart anything here. What is the logic here? Logic is simple, right? There were banks who came forward to set up RRBs. These were referred to as the sponsor banks. Any problem here? Let me know, right? There were certain banks which came forward to set up RRBs. These were referred to as a sponsor bank. And Government of India said, half of the money, half of the capital to set up this bank, I will give it to you. I will give it to you. Right? And remaining, you plus a state government, you contribute the remaining capital. That is generally the ratio is simple here. The ratio is 50%. Half will come from the center, 50%, 15%, and 35%. 50, 15, and 35%. 50 from the center, 15 from the states, and 35 from the sponsor bank. For example, have a look at this. The SBI as a sponsor bank has ownership of 14 RRBs. Right? SBI is a sponsor bank for 14 RRBs. Punjab National Bank is a sponsor bank for these RRBs. Again, just for sake of example, right? Remember this. Do not by heart. UPSC will not ask you it. Right? UPSC will not ask you. Right? Give me the list of right, SBI acting as a sponsor bank in which of the following? Absolutely no. UPSC will not ask you that. Do not waste your time. And many of the students were asking, right, sir, give me examples of RRBs. These are examples of RRBs. These are the examples. Again, do not buy heart. Do not waste your time. But please do let me know, is the concept of sponsor bank okay with all of you? Is the concept of RRB okay with all of you? Anybody has a problem so far? Please do let me know. Any problem? Lead banking is slightly different. Don't worry. Lead banking is slightly different. Okay. Can you explain again? Certain banks were identified and they were asked to open RRBs. Right? They were asked to open RRBs. Right? For example, SBI opened RRB, Andhra Pradesh Gramina Vikas Bank. Okay, Gramina Pradesh, Andhra Pradesh Gramina Vikas Bank. This was opened by SBI. Now, because SBI has opened this bank, this is an RRB, SBI will be referred to as a sponsor bank. SBI will be referred to as a sponsor bank. Now, when this Andhra Pradesh Gramina Vikasa Bank was opened, half of the capital was contributed by the central government, remaining capital was contributed by the sponsor bank as well as the state government. Right? That is basically the idea of a sponsor bank. Okay. Now, right, come to the points here. What are the objectives? Why did Government of India promote RRBs in India? To promote development in rural economy. Any problem, please do let me know. To develop rural economy. Second one, to promote credit for agriculture sector as well as allied activities such as animal rearing, such as beekeeping, etc. To encourage industries in the village areas. To promote right, the growth of the carpenters or the business of the carpenters, craftsmen, artisans, etc. Fourth one, to reduce the dependency of weaker section of the society from taking the loans from money lenders, because the money lenders will charge a very high rate of interest. But rather than that, if you take a loan from the institutional, from the formal sources, rate of interest will be much lower. To make backward as well as the tribal areas economically better. These are some of the objectives with which the model of RRB was actually promoted by the government. Next, the sponsor bank were identified. Sponsor banks were given capital by the government, both central as well as the state, and they promoted opening of more and more RRBs. Point number two, right, these were mainly sponsored by the commercial banks, sponsored by scheduled commercial banks. Now it could be, right, it could be a public sector bank, it could be a private sector bank, but don't worry, any scheduled commercial bank was allowed to sponsor regional rural bank, right? Any scheduled commercial bank was allowed to sponsor a regional rural bank. Now, point number three, whenever this commercial bank will sponsor a regional rural bank, they will not just provide capital, they will also have control. They will also have control over the management of the RRB. That is, they will appoint the chairman to the RRB who will take care of operations, who will take over the management of these regional rural bank. And have a look at the last point here. The RRBs, the mandate is the RRBs will have to provide 75% of the total credit under the concept of PSL, priority sector lending. Right, done. So this is basically the model of RRBs, but over a period of time, more than 100 RRBs were set up in India, but today number of RRBs have actually reduced. The reason why RRBs are coming down in India is very simple. First one is RRBs are not able to compete with the scheduled commercial banks or other scheduled commercial banks, and as a result of this, they are not able to collect more and more deposits. Point number one, they are not able to compete. They are not able to compete with these other scheduled commercial banks to collect deposits. So on one side, mobilization of the deposits has gone down. Second, whatever loans they have given to agriculture sector, to artisans, carpenters, weaker sections, etc., lot of these loans are becoming non-performing assets. And third, the cost of operations. The cost of operations for RRBs are also increasing. As a result of this, large number of RRBs are incurring losses. In fact, Government of India is basically promoting now, is pushing. It is pushing right into the merger of multiple RRBs. That is, multiple RRBs are getting merged to create one RRB. Right, that is being done by Government of India for the last 1 decade now, so that weaker RRBs will be merged and we will have a better functioning RRBs over a period of time. Then can we go forward now? Any problem? Can we go forward? Any issue with what we have discussed so far in the context of RRB? Please do let me know. Point number three, cost of operations have increased. My dear, put all the 3 points together. On one side, more branches have been opened. What will happen to cost of operations? Let me know. What will happen to cost of operations? Cost of operations for RRB will be higher. On the other side, NPAs have increased. What will happen to revenues earned by RRBs? Revenues earned by RRBs have fallen. And right, what has happened to the deposit collection? Deposit collection for RRBs also have fallen. So the money which is used by RRBs to give loans has gone down. Revenues for RRBs has gone down, right? And the cost of maintaining RRBs has increased. Will it not increase losses for RRBs? That's what. That's it. Okay. What is PNB? PNB is Punjab National Bank. PNB is Punjab National Bank. It is not a concept. PNB stands for Punjab National Banks. Okay, done. This is basically the concept of RRBs. Can we go forward? What is allied activities? Along with agriculture sector, what are the other activities which are associated with agriculture sector are called as allied activities? I'm actually surprised by these kind of questions. I'll tell you why. You have not read about, right, let's say, beekeeping in your high school. Have you come across it or not? Sir, we have already forgotten what you have learned in the high school. Beekeeping, animal rearing. Right? Don't you think all these are associated with agriculture sector? These are called as allied activities. Right? These are called as allied activities. Okay. Now let me go to the next one. NABFID. Any other questions? Any other concern? Are the cooperative banks also commercial banks? My dear, have you revised? Let me ask a counter question to you people. Have you revised? If you say yes, sir, I've revised, then tell me, are cooperative banks commercial banks? Are RRBs commercial banks? You tell me now. You tell me. Arey Baba, no. Great. Those who are saying no, it shows that you are not revising. Trust me, it shows that you are not revising. Can I prove how? Please look at this picture. Please look at this picture. Is the picture there in the PPT that was given to you day for yesterday? Right? Tell me. If I'm wrong, please correct me. I'm happy to accept it. And day for yesterday, did I say, right, the head of, right, the commercial banks, the regulator of commercial banks is Reserve Bank of India. Right? And commercial banks are further divided into two parts, scheduled commercial banks and non-scheduled commercial banks. Please tell me, regional rural banks, are they commercial banks? Please tell me, cooperative banks, are they commercial banks? Of course, yes. Arey Baba, you people are not revising. You people are not revising. That is the reason all of these things will happen. Right? Please don't do that. No point in collecting all these PPTs and keeping with yourself. No point. You're becoming a collector. Right? I'm pretty sure you're becoming a collector. Now you decide which collector you want to become. I hope you understand. Again, right? I'm not criticizing anyone. Don't take it personally. Don't say, how dare you talk to me like that? No point in simply collecting so many notes, so many books, so many magazines, so many articles from the newspapers and not reading it. Right? And there is no point. You're simply wasting money, right? Wasting resources. Right? Whatever notes you're getting, whatever PPTs you're getting, use them efficiently. Revise, revise, revise. Let's start. Sir, are cooperative societies and cooperative banks one and the same? Tell me, my dear, do you think a milk cooperative is a milk cooperative bank? Tell me, very simple question. We have discussed this. I gave you example of cooperatives in India. Then I went to cooperative bank. You tell me, is a milk cooperative a cooperative bank? No. Can I say milk cooperative is a cooperative society? Correct or not? Society is an umbrella term. Society is an umbrella term. Under Cooperative Societies Act, all these cooperative societies are registered. One such cooperative is a banking cooperative. Very simple. One such cooperative is a banking cooperative. Okay. Okay. Done. Let me go to the next one here. NABFID. I'll address your question now. I'll address the questions. Don't worry. NABFID. Now, please understand. Tell me the definition of a commercial bank. Let me see how many of you remember. I've given this definition, by the way. Don't tell me that I've not given. Right? When I discussed the structure, I gave you the definition of a commercial bank. How many of you remember what is the definition of a commercial bank that I gave? I said commercial banks are those which will be involved in collection of deposits, which will be involved in the collection of deposits, and which will give loans to customers. Correct. Very simple idea. What are commercial banks? Which are involved in collection of deposits and which will give loans. Now come to a new type of a banking unit, National Bank for Financing Infrastructure Development. Understand this very carefully. Those students who are asking, what is a commercial bank? Is there any example of a non-commercial bank? Understand now. Come to the next example of a type of a bank, National Bank for Financing Infrastructure Development, NABFID. Now, what is the role of NABFID? I'll tell you in a very simple statement. NABFID, let's say, will provide loans only for infrastructure projects. Only for infrastructure projects. But NABFID does not collect deposits. NABFID does not collect deposits from you. NABFID will not collect deposits from me. How NABFID will collect money then? From where NABFID will get the money? NABFID, let's say, will issue bonds in the market, collect the money. Now, please tell me, look at this and tell me, does it strictly fit into the definition of a commercial bank? Think of it. Does it strictly fit into the definition of a commercial bank? I'll give you one more example. World Bank. World Bank. Do you think World Bank will collect deposits from presidents of USA, president of India? Do you think that is the role of World Bank? No, my dear. Right? World Bank does not collect deposits like this from customers. But World Bank will provide loans. World Bank will give loans. Do you think World Bank is a commercial bank? No. Right? So I hope you understand now. Right? Then what is the importance of these kind of banks? These are called as development finance institutions. These are called as development finance institutions, DFIs. Development finance institutions, DFIs. And look at the name itself, you'll understand what should be the role of such institutions. Development finance institution. These kind of institutions are not involved in commercial banking. They are not involved in commercial activities. For example, collection of deposits. No, they are more involved in promotion of right infrastructure development. They are more interested in providing credit for construction of road, airport, etc. These are basically called as a DFIs. And one example of a DFI that is being promoted by Government of India now is a concept of NABFID. NABFID, National Bank for Financing Infrastructure Development. Can we go forward now? Can we go forward? Now, NABFID, right, it's a statutory authority which has been set up by the government. The act has been passed. 100% of NABFID is there with the Government of India as of now. Over a period of time, Government of India stated, I will sell ownership of it. I will sell. After how many years? That has not been given. Right? After many years, Government of India says, right now 100% is there with me. After many years, I will sell part of the ownership. Only 26% I will remain. It will remain with me. Remaining, I will sell it in the market. To whom? At what price? Right? How much money government will collect? You do not have data regarding that because as of now, simple. 100% is with Government of India. Next one. What are the functions of NABFID? What are the functions? Now, let me introduce one important concept to all of you. Understand this very carefully. Let me introduce one very important concept. Asset liability mismatch. Asset liability mismatch. Now, what do you mean by asset liability mismatch? Let me explain it to you. Understand this very carefully. Understand this very carefully. Here is a bank. Bank will collect a deposit. Bank will collect a deposit of, let's say, 100 rupees for a duration of 3 years. Fixed deposit. Let's say 3 years. On the other side, bank will give a loan for 15 years. Bank will give a loan for 15 years. Now, please make an observation. Is the tenure of asset equal to tenure of the loan given by the bank here? Let me know. Is the tenure means maturity period. Right? Is the tenure of the loan given by the bank, is it the same as a tenure of the asset for the bank? Answer is no. I'm sorry, asset and liability. I'll repeat by mistake. Is the tenure of the deposit, that is a liability. Is the tenure of liability the same as the asset tenure for the bank here? Answer is no. Thanks a lot. Most of you have answered correctly. Answer is no. This is called as asset liability mismatch. This is called as asset liability mismatch. And it is a problem for a bank. It is a problem for a bank. Why? Right? Think of this. You are the depositor. You will come to me after 3 years. You want to withdraw this 100 rupee. Is there a possibility? Is there a possibility that I might not have this 100 rupee? Let me know. Yes or no? Right? You will come to the bank. You want to withdraw this money. But is there a possibility? I'm not saying guarantee. Is there a possibility that I might not have this money because I've given it to a company which will repay it to me after 15 years? So that can that cause certain pressure on the banking sector? Can that cause certain pressure? Of course, yes. Now, many of you will ask, sir, but it has never happened with me. Many of you will answer, and that is correct. Many of you will simply say, sir, yes, sir, it could have happened, but I went to the bank, I was allowed to withdraw 100 rupee. No problem with that. How will the bank address this issue? Bank will borrow this 100 rupee from another customer. Bank will borrow this 100 rupee from one more customer and give it to you. But what if, understand this point carefully, what if when you kept the fixed deposit, rate of interest was, right, let's say 5%. When you kept the fixed deposit, rate of interest was 5%. And when the bank collected this new 100 rupee deposit, rate of interest was 6%. Tell me now, don't you think because of asset liability mismatch, the bank will face interest burden? Yes or no? Right? Because of asset liability mismatch, the bank might face higher interest burden. Anybody has a problem in understanding this? Because of asset liability mismatch, the bank also might face liquidity pressure. Anybody has any issue regarding these two? Please do let me know. I'll repeat it again. Because of asset liability mismatch, the bank might face one interest burden, and second one is the bank also might face liquidity issue, liquidity concern. Anybody has a problem? Can we go forward? Not able to understand. My dear, you are a bank. I will keep 100 rupee with you for, let's say, 1 week. You will take that, give it as a loan to Mr. Vijay Mallya for 10 years. I will come after 1 week. I want to take that 100 rupee. Do you have that 100 rupee? Let me know. Do you have that 100 rupee? Right? Don't you think you will now have to borrow from someone else, collect money from someone else, other depositors, so that you will give me that 100 rupee? Liquidity pressure. Yes or no? Liquidity pressure. Right? Liquidity means what? Do you remember the term liquidity that we have discussed yesterday from the context of banking sector? Liquidity means how much money is available for the bank to provide in the form of loans. Will it not put liquidity pressure in the banking sector? Second one is, when you kept the deposit, imagine the rate of interest is 5%. Imagine it is 5%. Now, right, this bank will collect a fixed deposit from one more customer at 6% to pay 100 rupees back to you. That is meaning now the bank is paying a higher 1% rate of interest so that they will have money to give you for withdrawal. That is basically the interest pressure. Any problem at least now? But the liquidity coverage ratio is also there. Are Maba, what is there in the liquidity coverage ratio? Think no. You people do not think only. What is there in the liquidity coverage ratio? What component is there in the liquidity coverage ratio? Cash is there or not? Tell me, is the one of the component of LCR, is it cash or not? How many have revised it? From where do you think a bank will collect cash? Now tell me. From where do you think a bank will collect cash? From customers only, right? Yes or no? From where do you think a bank will have cash? From customers only. So that is what I'm saying. Bank will collect 100 rupee from another customer, but at a higher rate of interest. So that means the bank is paying a higher rate of interest now because you want to withdraw money. Any problem at least now? Any problem? So asset liability mismatch is a problem for a bank. And tell me, please tell me one example, right? Think of it. Example one, you will borrow for 3 years, you will give a loan for 20 years. Example 2, you will borrow for 15 years, you will give a loan for 20 years. Please tell me, asset liability mismatch is a bigger problem under example 1 or example 2? Simple, right? Asset liability mismatch, is it a bigger problem in example 1 or example 2? Or Baba, some of you, right, are not able to follow what I'm saying. Is it example or an example 2 where ALM problem will be higher? Both. You do not understand my question only. I said between both of them, where pressure is higher, so in both of them, pressure is higher. How? Example 1, ALM problem is higher. Any problem here? In example 1, asset liability mismatch problem is greater one compared to asset liability mismatch problem in example 2. Anybody has difficulty in understanding this statement? Let me know. Anybody has difficulty in understanding this? Because here you are borrowing for a longer duration. Even if you have a doubt, in example 2, you are borrowing for longer duration, right? Compared to example 1. Right now, understand the problem here. Can I say public sector banks or scheduled commercial banks in India generally face the problem of asset liability mismatch? Correct? Public sector banks or scheduled commercial banks generally face the problem of asset liability mismatch. But on the other hand, there is a lot of demand for taking infrastructure loans. Many developers want to take infrastructure loans. And what is the feature of infrastructure loans? Do you remember this? Infrastructure loans should be one, higher value. Second, should be given for longer duration. Correct? Right? Infrastructure loans should be given for longer duration and higher value should be given. Now, don't you think scheduled commercial banks, if they start providing more and more infrastructure loans, they will have more asset liability mismatch problem? Simple point. If scheduled commercial banks will provide more and more infrastructure loans, will they not face more and more asset liability mismatch problem? Now tell me, in that context, if government will set up one authority which will provide a long-term loans for infrastructure, will it not reduce the burden on scheduled commercial banks? Simple argument. Will it not reduce the burden on scheduled commercial banks to provide infrastructure loans? That is the reason NABFID is so important. That's the reason NABFID is very, very important. Right? So what is the role of NABFID? It will provide long-term loans. If there is any dispute, it will try to mediate, try to resolve the dispute issue. It will promote more and more private sector investment into infrastructure in India. These are some of the objectives with which Government of India has set up an authority by the name of National Bank for Financing Infrastructure Development. Now, what are the benefits? What are the concerns? Simple. Do not complicate it. Point number 1. Infrastructure will have a multiplier effect. Now, please do tell me, did we discuss a concept of multiplier effect? Let me know quickly. Did we discuss the concept of multiplier effect earlier? That is, if you increase the expenditure by 1 rupee, multiplier effect, Baba, not money multiplier. Are Baba, right? Please listen to me carefully. Multiplier effect, not money multiplier. I'm talking about multiplier effect, not money multiplier. So now tell me, did we discuss multiplier effect earlier? Right? None of you are answering now. I am not asking money multiplier. I am asking, did we discuss a term called as money multiplier? Right? Some of you are saying yes, or some of you are saying no. Anyways, multiplier effect simply means if expenditure is increased by 1 rupee, by how many rupees GDP will be increased? Simple. If expenditure is increased by 1 rupee, by how many rupees GDP will be increased? This is called as a multiplier effect. Multiplier effect should be always higher. And in case of India, infrastructure financing has a multiplier effect of more than 2. I'll repeat it. In case of India, the multiplier effect of infrastructure financing is more than 2, right? That is basically point number 1. Burden on the banking sector to provide infrastructure loans will come down. Asset liability mismatch problem in the banking sector to a certain extent will also be addressed. It is expected to promote a virtuous cycle. It is expected to promote virtuous cycle in the economy. So these are some of the benefits associated with NABFID. Now, what are the concerns? Right? You want to promote investment in infrastructure, land acquisition. Don't you think that will basically be a problem even today in India? Simple. Land acquisition, is it a problem or not? Okay. So first concern is land acquisition. Okay. So let me take a break here. Let me stop the discussion. I'll require another 5 to 10 minutes, but that basically means I'll have to extend the class. Let's not do that. Next week, I'll start from here. Next week, that is on Monday, I'll start from here. That is what are the concerns, what are the problems. Okay. Now, before we wind up the class, if you have any questions, please do let me know. Sir, with more digitization, our RRB is facing a threat from private banks who provide a higher rate of interest. Yes. RRBs are facing a threat. Cooperative banks are also facing a threat. Right? Many of these banks, they are not able to retain a working population. I'll repeat it again. Understand this. Many of these RRBs, many of these, let's say cooperative banks, they are not able to pay the same salary that scheduled commercial banks are paying. Private sector banks are paying. As a result of this, many of the people are quitting these jobs. They are taking up other jobs in PSBs, private sector banks, etc. That concern is always there. Okay. What are shares in case of cooperatives? In case of cooperatives, every let's say member, every member is called as a shareholder. Every member based on the contribution is called as a shareholder. But please remember this, in cooperative, every member will have only one vote. Remember, this is a very important feature of a cooperative. Every member, right, will have only one vote in case of cooperative. It is not based on the ownership. It is based on one member, one vote in case of cooperatives. What is the time period for election in cooperative societies? What do you mean by time period? What is the meaning of time period? I'm not able to understand it. Sir, say what sir say about dodgy loan? The loans which are doubtful whether they'll be repaid. If there is a loan which has been created and if it is doubtful that these loans will be recollected, these are generally referred to as dodgy loans. Right? For example, loans which have been evergreened. Okay. Sir, NABFID does not take deposits, then where did they get capital for giving loans? Did I not answer this question earlier? My dear, please tell me, did I not answer this question earlier? It is the right in front of you. It is the right in front of you. But anyways, okay. In books, there are other concepts as well. So should we ignore it? I'm not saying don't ignore it. If it comes in the current affairs, read it. Okay. Sir, cooperative banks offer loans to non-members as well? Of course, yes. Of course, yes. Cooperative banks, by nature, these are banks. Right? Because these are banks, they are allowed to offer to any customers. Can population be a criteria to set up a bank in rural area? Generally, no. Can cooperatives issue bonds? Now they are allowed. Now they are allowed. Okay. Sir, you have said NABFID resolves issues. My question is between whom? Right, have a look at this. Facilitating negotiations with various government authorities for dispute resolution in the field of infrastructure financing. Right, can you read this statement? Can you read these statements? If there is a dispute between, let's say, company and government and various government authorities, they will try to resolve this kind of a dispute. Sir, sponsor bank and anchor bank are the same. I have not come across the term anchor bank in the context of RRB. But if you are saying anchor bank is the one which will make investment and oversee the management, then yes, both are one and the same. What is the difference between FRS and money multiplier? My dear, through FRS itself, money multiplier will be done in the economy. What is money multiplier? That is, if 100 rupee is introduced in the economy, to what extent the total money supply will change? That money supply, by how many times the money supply will change, right? That is called as money multiplier. But why will the money supply change? It is because of fractional reserve system. Okay, done. So let's stop the discussion today here. Next week, Monday, let's start from the concerns or the issues related to NABFID. Last couple of more concepts are left out. After that, banking will be done. We'll take up questions, right? Let's solve questions. Then you will understand to what extent this chapter is important. After that, we'll take it. We will start the next chapter. Okay. So take care. Have a great day. Please read those articles. I want your feedback on Monday. Whether these articles are relevant. Are these articles right important for you? Is it related to what you're discussing in the classroom, etc.? Right? Please provide the feedback regarding those articles. Done. So that's it from my side. Take care. Have a great weekend ahead. See you again next on Monday, 6 a.m.